Good morning, everyone, and welcome to Introduce Investor Days. My name is Jesper Jensen, and I work as an analyst here at ABG, and where I follow companies like Invisio. Today we have the CEO of Invisio, Lars Hansen here, who will tell us all about the company and its exciting future plans. So
Absolutely.
Please go ahead.
Thank you. Great to be here. As said, I'm the CEO of Invisio since 13 years back, and Invisio is today the global world leader of advanced hearing protection and communication systems. So the purpose of our company is to try to remove noise-induced hearing loss from the face of the earth. We believe that people that are exposed to high noise when they work should really be well protected and should not be exposed to things that will damage their hearing. So we try to protect people that work in noisy environments, people like in the army, police officers, firefighters, and others that works where it's really, really noisy. So one thing is to protect their hearing. Another thing is also to make sure they can hear what is going on still while it's noisy, and also that they can communicate with each other and give each other important information when it's really noisy. Our personal radio systems, as we call them, are consisting of a small headset, as you can see in the ears of these two gentlemen. And the person on the left has a small control box on his shoulder that he uses to communicate with his team. And then normally they will have a communication radio on the back that is transmitting to the team or to the headquarters. So this is the system we sell. We are a company which is listed on Nasdaq Stockholm Mid Cap since 2015. We are about 100 people, headquartered in Copenhagen, based in the cluster of hearing technologies in Copenhagen. We are having a fairly simple business model. We do research and development, sales and marketing in-house. And then we work with very skilled professional partners when it comes to manufacturing, which means that we can scale our manufacturing up and down quite easily without any costs for us because we don't own the manufacturing plants. We sell mostly through partners, but we also sell more and more direct today. We have opened our own offices in the US, France, Italy, and also in the Far East lately. So we will see more and more direct sales over the coming years, which of course gives us a little more cost, but also gives us a better gross margin when we are selling our products. Traditionally, when we started out, the biggest opportunities were with military, because we could see that, especially after the activities in the Middle East, there were hundreds of thousands of people coming back with permanent hearing damage and hearing loss. And actually, this is the biggest single cost for the US Veterans Administration, paying compensation, handing out hearing aids, and re-educating people that can no longer work because their hearing is severely damaged. So it's a huge cost for society with all these people being hearing impaired and hearing damaged. So we try to work with different military organizations around the globe to help them with this issue. So we have been, in this regard, extremely successful. Normally, the sales process is through public tenders, where the government or the organization will go out and ask for certain system requirements for a large amount of people. And since 2012, where our first large customer was the Danish Army, we have been very successful in the key Western and NATO countries, starting with the US Army in 2013, the British Army in 15, Canadian in 15, Australia 15, and so forth. And a number of programs have been added in recent years, and also especially in 2019. Actually, the later part of 2019, the third quarter, has been a real successful period for the company. We have won a number of large contracts. We have also won some large contracts within police that I will get back to. So this is how we drive the business, sell through large public tenders. We have, for the sake of trying to describe the market, made a small calculation on the size of the addressable market for the military. And there are about 2 million potential users that we see as the addressable market for us. And this means that these are the people we believe will have a communication radio within a foreseeable future and will need our type of system. For these 2 million people, we believe the annual target market for Invisio is about 5 billion Swedish kroner. As I said, we are just now entering also larger programs within the police force, and there we are working on market numbers to be released over the coming quarters. We also have another product area that I will get back to that we are working on, which will add to the total addressable market, which is of interest to Invisio. So we have a simple strategy. The 2 million people that I just mentioned were the target markets. We have so far only sold to about 200,000 in brackets, which means we've sold to less than 10% of them. So there's still a huge potential with the remaining 90% in many different markets in Western Europe and also in the US. So therefore, we still have a lot of activities going on to increase our market share in both Europe, North America, and Oceania. That's also why we open office in the US, for instance. So a lot to be done there. But geographical expansion is also on our plate in terms of addressing markets in especially Far East Asia, South America, and certain parts of the Middle East, where we believe there's a huge potential for our types of products. Just yesterday, we announced a press release regarding Japan, where we have been selected for the Olympics next year by the Japanese police. We got an order, first order for about 10 million kroner, where, as I said, the Japanese police will use our equipment in their security work around the 2020 Olympics. So this is one of the first breakthroughs we have in the Far East Asia region. Product development is where we spend a lot of our money and resources. We are a very profitable company. We have a sound financial situation. We have no debt, and we allow ourselves to invest where we see opportunities into new product areas. On that note, we have a financial target of growing the company's revenue about 20% in average per year, with an EBIT margin not less than 15%. If you check our reports, you will see that we are far above 15% EBIT margin, but the 15% should be seen more as a floor that we cannot drop below, even though that we invest heavily in expansion. Last but not least, cost efficiency. Again, the business model that we apply with external manufacturing is extremely efficient for us. It also it means very little fixed cost, and we are able to negotiate with different suppliers when we have a new product that needs to be manufactured. Now, those of you that know Invisio and have followed us over years will know that our order intake, since we sell to governments and big tenders, that the order intake, as you can see on the left-hand side, fluctuates greatly between the quarters. Some quarters we have very little order intake. Quarters after, we have huge order intake. That's just the nature of the business. But of course, as we grow now and we have more and more companies or countries that we sell to, it will of course smoothen out a little bit. But you can see also in 2018, there is great variation between the quarters. On the right-hand side, on the staples, you can see then our sales, our revenue, and there it's a little more even, but still some fluctuations. We try to keep a considerable amount of stock so that we can deliver to our customers within at least 1.5 quarters, so that we are able to fulfill their requirements for when they need the products, but also that means our revenue is a little bit more smooth. Now the line that you see is our revenue if you take it on a 12-month rolling average, and as you can see there, the development is much more stable and going in the right direction. So, as I always say, if you want to evaluate Invisio, you should definitely do it on a longer-term basis than just a few quarters. In the third quarter, as I said, we have had some very important developments in the company. One of the larger ones was the fact that we were chosen by the US Marine Corps to a program called Hearing Enhancement. where it is intended that between 7,000 and 65,000 Marine soldiers should be equipped with modern hearing protection. We got the first order of about 40 million Swedish krona during that quarter, but we do expect that now the next financial year is starting in the US, that we will see more orders for this customer. And the potential is really great here because the Marines are many more than 65,000. They are actually 210,000. So a huge potential and also a huge feather in the hat for us because it's a very prominent group, of course, that everyone knows about. Similarly, the American Department of Defense gave us a 5-year so-called IDIQ contract, which basically means that we are not guaranteed anything under this period of time, but the maximum order value over the 5 years is $30 million, approximately 290 Swedish krona. And we are pretty sure that this money will be spent because we know that they need it. And we also know that this is a continuation of a contract we got in 2017, where they have used the first $11-12 million under that contract that expired, and now they have given us a new contract for 30 million. So for me, that is a proof that they are very satisfied with what they've been buying from us and our deliveries, and therefore they have now given us a new contract for a much larger amount. In Europe, we were chosen by Belgium in a partnership with Thales to deliver a new hearing protection system for the entire Belgium army. We received 2 orders in total of 55 million Swedish kroner from the Belgian army. And we of course know that once we get in there and the contracts are running, then there are potential for further orders. The good thing about these contracts is that they are normally long, 4 or 5 years, with normally that you have an option to extend for another 2 or 3 years. So normally between 4 and 6 years, we are having a so-called monopoly on this customer. They do not buy from more than one source. So as long as we do well and treat them right, then we will have a very strong position with our army customers for a long period of time. And then, as I said, in Sweden, we were awarded 2 framework agreements with the Swedish police. This is the largest police order we have seen so far. We did get an order from Germany earlier this year, so the police market is really a priority for us. But Sweden is the first time we see a country where we think the intention is to equip the entire police force. As you can see on the quote from the assignment leader, Per Olof Olsson, it is the intention to make this solution available to as many police officers as possible in Sweden, as much as the budget allows for. The first order we got from them was for 19 million that we are supposed to deliver before the end of the year. But we believe the potential for us is between 50 and 75 million kroner as more and more police officers will be equipped. And we are, of course, very happy to hear that the politicians in Sweden are considering doubling the amount of police officers up until 2023. Yeah. Good for the police and also good for us in this regard. Then I would just like to brief on a new product category that we are just launching, which is around communication in vehicles. And this might be seeing a little threatening, but this is actually not only for military, this is equally important for police. And this is about being able to communicate with each other when you are in vehicles, because the systems we give people today allows them to communicate when they are out and about in the field. In vehicles, it's a little more tricky. And we have been asked by several countries and users about trying to make a simple intercom system that will allow them to talk to each other when they are being transported, either in a vehicle, in a boat, or in a helicopter. And it should be light and portable and easy to carry. So therefore, we came up with a system like this that we call intercom in a bag, which basically means that the radio responsible in a group of people will carry some special radios. It could be satellite communication or other types of radios that he has in the bag, some antennas and batteries, and then the little Invisio intercom system. And when they enter into one of these types of vehicles from the backpack, it will be possible to take out the radios, the intercom, some cables, and connect everybody, and then they will have a group communication system that they can use and use the external radios. And as soon as they leave the vehicle again, they just put it back into the backpack and move. So this is a very innovative new concept where we think we have very little competition. This is again driven by customer demand, both within military and police. So we think this is a very, very interesting area for Invisio. We will try to quantify it a little bit over the coming quarters, but so far we have said that we believe this area will be as important in revenue as our existing business. So this is a huge potential for us over the coming years, but it will take a little time, as this is also things that are sold under tenders and contract. So all in all, when you look at Invisio, as a summary, we are trying to help people that do really important works in police, in military, in firefighting, trying to protect their hearing, help them communicate. We have seen some really good progress over the last 7 years, but especially in 2019 with some very large contracts in military and in the police that will help us grow to our ambitions over the coming years. And we have a new product category for communication in vehicles that will further enhance the possibilities for the company to continue to grow over the coming years. That was it. Ready for questions?
Yes. Thank you, Lars. First off, I know you're expanding to new geographical markets like South America and the Middle East, and I was just wondering, are you allowed to sell your products to army forces in these countries, and how do you view that? Is it problematic, or is it?
So from a legal standpoint, it's not problematic because we are not classified in any form or shape as military equipment. This is personal protection equipment. We protect people, so we can sell to anybody we want. That being said, we are of course also cautious about not selling to problematic areas. So what we normally do is we follow the radio manufacturers. So some of the large radio manufacturers are Thales, Harris, Motorola, and others, and we of course see where they are selling. So if they are selling to Malaysia and they believe that's fine, then we will also do that if we don't. If we are ever in doubt, we will ask both the Danish and the Swedish authorities about certain customers and so on, if there should be a problem. But in theory, we can sell to anybody. We are not in any form or shape classified as military. I know we have a lot of military pictures, but we're not classified as military, and we are selling to a lot other than military. But we also have to be honest and say that we have a lot of people in the military who has issues with hearing damage and so on. So we are trying to help these young people, 25-year-old that goes into the army and bang, his hearing is gone for the rest of his life. We don't think that's fair.
Awesome. And also you mentioned that you're broadening your target market with police forces. And what are some of the challenges you've faced selling to police versus army forces? Are there shorter lead times? Are they longer? How do the dynamics?
In general, the police forces are a little less concentrated when they buy things. In Sweden, it's the first time where we see an entire country buying for everybody in one go. In US, for instance, when we are selling to the police force, which we are also doing with great success now, we have to go to many more places to sell. So if you want to sell to police officers in Los Angeles, there are about 50,000 police officers in Los Angeles, but they are split up into different groups so that you need to visit them all. It's not like they buy for everybody in one go. So you need, it's a bigger sales process. More people needed for that type of sales.
Mm. And also you mentioned your new product, Intercom, and I know that you're targeting existing clients for the first go-around. And how would you foresee lead times there? Like, would it be shorter because they've used your products before, or?
We hope so. We hope so. Of course, now they know our company. They know what we can do. Many of them have given input, so we hope it will be shorter lead times. But still, most of the time, this is about a lot of money, so it has to go through public tenders. That's just the rules and the law. So we cannot do much about that. But we have, of course, been preparing customers for quite some time that we are working on this. So we do think that there are customers prepared to look into this shortly. But I don't think we will see huge orders until end of 2020, 21. First year will be smaller orders from, test orders from different units.
And lastly, I was wondering how large a part of your sales are recurring in nature? Like your existing customers, how often do they order new products or more products?
Quite a lot. Now, it's a little difficult for us because they don't always tell us whether it's to replace or whether it's because they have more people. But we normally divide it in the way that everything we press release is either strategic or it's at least 10% of our revenue. And below that, we consider it some kind of recurring. It is definitely 20%, maybe more now, that is recurring business from existing customers, also from these programs that we just mentioned. We see orders from all these programs every year. They do buy something every year.
Thank you, Lars.
Thank you. Thank you.
So we start with the next presenting company. That will be Jonas Hasselberg, CEO of Proact. And my name is Daniel Thorsson, equity analyst at ABG, covering IT and tech companies. So go ahead, Jonas, and we'll have some questions afterwards.
Clarifying question. Do we do this in English?
English, please.
All right. Okay. Surprise. All right. Good morning, everyone. I'm the CEO of Proact since a little bit more than a year back. So I'll give you an update on the company. I'll give you a little bit, maybe a little bit too much, frankly, a picture of where the market is going, because it's important for all of us to understand which market are we playing in and what happens in our market. And then we made an acquisition not too long ago. Just want to give all of you an update on that acquisition, why we did it, and a little bit of the numbers behind it, and then some numbers, and then we'll wrap it up. And I'm ordered to do this in 20 minutes, which means I'll speak relatively quickly. We're celebrating our 25-year anniversary this year. So Proact was founded in 1994. We deliver technology or IT infrastructure solutions to big companies into their data centers or in what we call hybrid cloud solutions. So this means basic storage solutions where companies store huge amounts of data, server solutions so they can do large computing or networking. So it's the fundamental building blocks of an IT infrastructure is what we deliver. We're turning over around 3.6 billion Swedish kronor, including then the acquisition we did here recently. We're now over 1,000 employees in practically 14 countries around Europe. We're based here in Stockholm, and we run our business in a number of business units, and we have what we call 4 delivery hubs, and this is an important part of our strategy going forward to make sure that we build our skills and competences around service delivery, and we'll speak a little bit about the service component, as it's such an important part of our strategy that we're centralizing and really building that strength around being able to deliver professional service levels out of 4 of those 14 countries. Customer-wise, we're incredibly proud of our customer base. It's a strong number of logos on this slide, typically larger customers, in particular in Sweden. Most of all the large companies are using Proact for the data or the IT infrastructure, but also across Europe. All different industries are represented. We're not dependent on a particular industry. The loyalty with our customers is very high. I met a number of customers last week. They've been with us for 15, 20 years and are surprisingly happy. And I don't mean excuse me, surprising, because I don't believe we're doing a good job. But since I'm relatively new, it's always a great surprise to come in and meet customers that are very, very happy with the service we deliver to them. And I really pressure them on what can we do better. And sometimes they don't find anything, which is obviously something that makes me extra proud that our customers are so happy. All right, market. Definitely a shift continues to go on, of course, in the IT industry. It's always been a fast-moving industry. The key things we see now is the increased pressure on the IT to deliver business value. It's not just a cost center anymore. It's not just something basic, you understand. It's really part of developing our customers' businesses. They're delivering new business models, new services, new products for our customers. The focus on innovation is definitely increasing. The expectations from the business in terms of the return of investment is increasing. And maybe the interesting part for us is a very significant portion of decisions around IT and spending on IT is coming from outside of the IT department. So the buying patterns within our customers are changing. That means that it's a different type of person, a different type of profile who's now making decisions on which platforms do we need for Internet of Things. So what platforms do we need to be able to crunch huge amounts of data to do analytics on all the information we have, or even artificial intelligence and machine learning use cases on all the data we have. So it broadens the number of buying centers and the people that we engage within our customers. And it also broadens the use cases for us to make sure that the IT infrastructure can deliver on. And this is important to understand, because running, for instance, a traditional finance system on an IT infrastructure has completely different requirements than if you're going to do analytics on huge amounts of data. So typically you would have slower access, focus on maybe on security and reliability on the data in a finance systems. And if you do artificial intelligence, you're going to run on dedicated processors, tailor-made process for mathematical computing. You will be running data with high-speed access to the data. You may have a geographical distribution in a different way than you otherwise would have. So the requirements driven by the use cases coming from the business of a company is very different than we've seen in the past. And that also means that the spend is actually continue to increasing within this business. So that's important to us. So a typical CIO, the person who's in charge within our customers for their IT spend, their IT infrastructure, sees a lot of demands increasing and changing, the business value, the speed of change, how do you modernize your data center. I always use my previous employer, Telia, as a fancy example, or a close to heart example, I should say. The oldest data system or IT system from Telia is from 1967. The newest, they're running prototyping and innovation projects in an Amazon cloud, for instance, and they have everything in between. So managing that whole spread of technology and all the different data and all the different applications that runs across that is actually a non-trivial task for most large companies, actually, not just Telia, of course. Hybrid models is a terminology you're going to hear a lot about. So hybrid means that the customer have applications and data in all the different variants you can imagine. The old systems from 1967, dedicated application systems that they may build for a particular purpose, cloud architectures that they built internally in their own data centers, or putting things in the public cloud like the Amazon and the Microsoft clouds. And most customers will do all of those in some sort of combination. For most customers, this means that the world is actually becoming more complex, not more easy. And this is great for Proact because we're here to help our customers managing their applications and their infrastructure and the data across all those variants. And security, of course, becomes a continuously increasing requirement and demand, and cybersecurity in general is, of course, super important for us. A couple of things to be aware of, and I mentioned them already. What is then accelerating this behaviors and these demands within our customers? Cloud services, of course, that modern technology that enables more rapid deployment of applications, more rapid scaling up of processing power or storage capabilities. AI and machine learning. A lot of us may think that this is still science fiction, but there's a lot of clever things happening now, whether that's truly artificial intelligence or if you're just making smart decisions based on all of your data, doesn't really matter. It's still a lot of companies are now doing a ton of work on analyzing all the data they have. And if I may use another example from Telia, Telia of course creates a ton of data and generates a lot of data from their networks, their mobile networks, for instance. Typically that data was used originally to manage the quality of the network. Are all the calls going through? Do we have enough capacity in our base stations? After a while, we realized that, hang on, we can see how all the mobiles are moving around Stockholm, for instance. If we anonymize that data, we can do traffic flow analysis. So suddenly the data, the same data, is used for a completely different purpose, and suddenly it has a business value that we didn't realize before. That happens in all our customers. So getting value out of the data is a very, very important driver for our customers. And then, as I mentioned, when we speak to our customers, and this is important to understand, a lot of people looking at Proact thinks, well, hang on, when Amazon and Microsoft are deploying cloud services, are you still relevant to your customers? Yes, indeed, we think we are. We know when we talk to our customer that most of them, like I mentioned already, won't go all in to the cloud. There are actually very, very few customers who will put everything in a public cloud. They will have that breadth of systems within their IT infrastructure that still needs to work, still needs to be managed, still need to be efficient. And again, that's where we think we can add a lot of value. All right, so the market we're playing in is definitely still growing, and we need to follow and make sure that we develop our portfolio. So that's one of our key strategic pillars, continuously evolve our portfolio of products and services so that we can capture that growth in the marketplace. The hybrid model, as I mentioned already, is the new normal. So our customers can combine the best of both worlds, dedicated systems, high-performing system, lower-cost systems internally, or rapid innovation and the scalability of cloud solutions. The agenda for our customers is becoming more complex, which means they need more help. Thus, the role of Proact is increasing. And again, we have a very, very strong role and position in our marketplace. We grew up as a storage company. 25 years ago, our expertise and speciality was helping our customers with storage of data, management of information, getting value out of all that data. And this is exactly what's now driving that transformation that most of our customers are going through. How do we get the value out of our data? And then, as I mentioned, there are new decisions being made in new parts of our companies, and that's another growth opportunity for us to find those new use cases, excuse me, and new decision makers within our customers. So for us, we do a lot of innovation and product development. We are expanding our customer presence, finding on new buying centers. We are establishing ourselves as a hybrid cloud provider and what we call a trusted advisor. We can help our customers not only with services and solutions, but also consulting. And we are accelerating our growth through acquisitions. These are the 4 pillars of our strategy. So on that note, as I mentioned, we acquired a company here a little bit more than a month and a half ago in the Netherlands called PeopleWare. PeopleWare is a company of 200 employees. They have business in the Netherlands and Belgium. Very strong in the mid to enterprise segment in the market, which is the same segment we're playing in ourselves in the Dutch market. They're more focused on the client side, the user side of IT. So they spend a lot of time on modern workplace solutions, so giving the employees of the companies a high degree of productivity. Proact, as you know, coming in more from the infrastructure side. So putting these two together, we now have a very complete offering when we go into our customers. We can do everything in terms of outsourcing and management of the IT infrastructure, all the way up to having very high productive and modern workspaces for our customers, including deployment, adoption, end user support. There is a local survey company in the Netherlands called Jarte, and this company here, PeopleWare, has been scored #1 in terms of the outsourcing quality for a number of years. Proact happens to be #2, so now the #1 and #2 in terms of quality have been merged. And we do hope that 1 + 2 doesn't make us #3, but rather go back to #1. They're very strong on Microsoft. Microsoft, as most of you know, has done a fantastic job for many, many years, but maybe even more so recently in terms of establishing their Office and their what's called their Azure propositions, their cloud proposition within the enterprise, and they are the dominant player now in the deployment of cloud and productivity solutions with most enterprises. So the plan here is now to integrate PeopleWare into our operations in the Netherlands and Belgium. We want this to be one Proact branded company, as I mentioned already, very complementary in terms of our businesses, very complementary in the way we do, or similar, I should say, in the way we do our business. So we think there will be a pretty straightforward and simple integration of getting this together. A very fine cultural fit. We behave very much in the same way. We make decisions. We meet our customers in very much the same way. And on top of that, of course, good complement with our customers. We think we can do a lot of cross and upselling on these customers. So that's great. We paid 17 million euros for this company. They have a turnover about 28 million euros, about a little bit more than 300 million Swedish kronor. A very high mix of recurring revenues. A little bit, roughly half of their revenues is under contract. And close to 90% is actually services revenue, so they have a very high degree of a services portfolio. For those of you who follow Proact know that we're roughly at 60-30 in terms of our mix. So 60% is from product and systems sales, and 30% is from, or 35 from services. These PeopleWare have a higher degree of services. And profitability on an EBITDA level of 7%. All right, shifting a little bit to an interesting customer case story, which is very recent. Örebro Universitet is one of the universities that are part of a EU program in terms of research around artificial intelligence, and they just made a decision to upgrade their infrastructure, or build a new infrastructure to drive that AI research that they're doing in the university. This is partly funded by EU, And the interesting thing here with this use case is actually representative for two of the things I've already mentioned. One, the requirements that these new use cases put on the IT infrastructure. So this is now built on computing solutions that are not using normal processors that we would have in a laptop like this. These are using highly specialized graphics processors that are tuned to do very, very large amounts of mathematical computations. So it's a different type of infrastructure that enables them to do exactly those use cases they want around artificial intelligence. But it's also funded by the research money, not their IT budget. It was one of those cases where we engaged with the researchers and the actual business, if I may use that word, of Örebro University to get this solution to be decided and deployed within the university. So it's a great example of how when we engage with our customers on the business side of their thing or their operation side of things rather than IT, how we can deliver a better and more dedicated solution to them. All right, Q3 seems like far away, but I'll just give you a quick update on the latest quarterly report we did here after the Q3 of this year, calendar year. A little bit of revenue decline because it's been a bit of a volatile market for us. The cloud services, however, so the contract value of our own cloud service offerings is continued to be good in terms of bookings, so 87 million of bookings of new cloud services. That's a pretty good and strong number. The cloud revenues, so our own cloud services, is growing by 15% year over year, also very strong growth. And then, like I mentioned, the acceleration of our revenue growth through the acquisition added another 280 or 300 million or so on a yearly basis of our revenue, which I think is something that we've talked about for a while in terms of our strategy, that acquisition to grow is now happening in reality as well. If we look at the rolling 12-month number, this is excluding the acquisition. This is again after Q3 of this calendar year, 4% organic growth in terms of revenue on the rolling 12 months. We're a little bit over 3.3 billion Swedish kronor with growth in both the services and our systems business. But you can see that we're struggling a little bit with our EBITDA level, partly because of pressure on the gross margins, but also we've had a bit of a decline in some of our consulting services in the second quarter. And then we updated practically exactly a year ago now our financial goals for the company. We said that we're going to grow by at least 10% on a yearly basis in terms of revenue. About half of that on average should be organic and the other half through acquisitions. We're okay on track with that with this acquisition we now did in the Netherlands. We want to reach an EBITDA profit margin of 8%. We have some ways to go there still. As you saw in the previous numbers, we're currently then at 5.2 on a rolling 12 months. And then we have a couple of more financial targets in terms of our debt level and our return of capital employed, which debt in particular is in good shape and maybe have a little bit more work to do on the capital employed. But we're still tracking and we still believe in these numbers. So we're committed to deliver on these numbers through the strategies that we've talked about. So in summary, very well positioned in the market that we believe is growing. We are a data center and a hybrid cloud specialist. This is at the core of the transformation that most of our customers are going through. It's exactly what they need to have in place to make their transformations. We are now strengthening our business in the Netherlands and accelerating our growth through the acquisition. And we believe in our financial targets.
Excellent.
Thanks.
Right on time, Jonas.
Of course.
Perfect. So we go ahead with a few questions. First one on acquisitions. You acquired Peopleware recently, service company.
Yep.
Before that, you acquired T-Mix in Germany in 2017, more of a product-related company.
Correct.
What should we expect in the future in terms of mix and geography?
So geography, if I start with that question, so we think we need to do acquisitions on a more regular basis, and we've geared up internally, both financially to have the ammunition to do it, but also in terms of having experts in place and the process in place to do it. So the Peopleware acquisition is a good proof that we can now execute. Geographically, we will continue to focus on our existing markets with Germany, UK, and the Nordics as priority right now. Netherlands continue to be interesting, but we're going to make the Peopleware integration first and make sure that we deliver on that business case. So we'll continue focus on our main and big markets. Our market share in Germany is still relatively low. Our market share in the UK is relatively low, so there's plenty to do in those existing markets already. In terms of profile, you'll see more of companies similar to Peopleware, where the services is a core part. We want the acquisition to help us with two things. We want to accelerate our growth, so they need to bring in revenue and a customer base, but we also want them to strengthen our portfolio and our skills. So using acquisitions to also accelerate not only the revenue, but our capabilities in similar to Peopleware. So more of services company in the cloud, networking and security space. That's where you will most likely see the acquisitions coming.
Okay. Looking at the financial targets, you have a margin target of 8%.
Yep.
You're currently around 4.5%. Will that be driven primarily by acquisitions of buying service companies, or can you reach that organically in the next 3 years?
No, we'll do a couple things. We'll do three things to be specific. Acquisitions will definitely help us because if we focus on companies with a higher degree of services, own services, they typically will have a higher degree of profitability. Shifting our own organic portfolio with the revenue mix shift towards our own services. And when I say our own services, there's typically three of them. We do consulting, so helping our customers figure out what's the right architecture for them, how should they deploy their IT versus public cloud or internally, those kinds of consulting, or just implementation training. We have support services, so make sure that their systems are all flashing green and working the way the customer expects. And then our own cloud services, so we manage and deliver services or IT infrastructure on the services basis to our customers. So a higher mix of those three service categories as part of the total revenue will increase our profits, and we have work to do to be more efficient internally. And that also goes for Peopleware. We typically spend most of our effort on growing our revenues. We have work to do to be more efficient and frankly more professional and quick in our service delivery. So those three things will help drive the margins.
Okay. A market question then. You have a relatively high share of sales coming from the UK, and how is that market developing related to the Brexit situation? What's the investment environment there, basically?
So Sweden continues to be our biggest market. UK is our second biggest market. Now, of course, with Netherlands breathing out the UK neck internally with the acquisition. And then Norway, Finland, Germany is roughly about the same size for us. UK market is, I think, continue to be a stable market. It's been a little bit less simple or a little bit more difficult in terms of engaging with customers due to Brexit, at least for one main reason, because there's some uncertainty in general, what happens politically, and there's definitely uncertainty in the public sector in terms of, okay, what are the investment levels going to be depending on the Brexit. But I think UK market is still going to be a good market for us. We're not too worried about it over the longer term, even though you may see some volatility quarter by quarter.
Okay. Looking at the Nordic market, which is obviously the largest for you,
Yep.
we see some signs of a slower IT investment growth in 2020. We hear that from companies. We see that from Radar 2 weeks ago. How will that potentially impact you? And how will you address that type of slower growth market?
Well, we have a little bit of a hard time seeing that slow, and it may still be coming, and it's a difficult market to predict. But the good thing for us, and I'm not going to promise anything here, but typically, even in a downturn, IT tends to be a focus area, both in terms of driving that transformation, becoming more digital that most of our customers or all our customers are going through, but even in terms of getting efficiency out in times where you need to be more cost efficient. IT is key, and we are delivering the fundamental building blocks of IT for most of our customers. They can't stand without computing power. They can't stand without storage power. The volumes of data grows day by day. So we're playing in a relatively stable part of the IT industry. So we see the Nordic market as still being healthy.
Okay. I think that we stop there. We're pretty much on time, and we thank Jonas from
Thank you very much.
Proact.
Thanks for listening. Thank you.
Greetings, everyone, and welcome to the next presentation. Here I have the pleasure of welcoming Pricer and Helena Holmgren as the CEO. Me, myself, I am Simon Granat, working as an equity analyst at ABG, covering a cluster of IT companies. And without further ado, I'll let you present the company, Helena.
Thank you. Good to see so many people here today. So we're here to discuss, to talk about Pricer and about the retail environment in general and why this industry is changing and why it is so interesting. There was a report from McKinsey presented in May this year, and they said if you aren't already implementing automation, you are falling behind. And that is the reality of a retail industry that is in tremendous transformation. The online grocery sales is still representing single digits. We talk a lot about online, offline, and it is true that lots of the growth is actually being generated online. But in a vertical, retail vertical like grocery, it still represents quite a small percentage of the total number. Most of us actually still go to the physical store, the brick and mortar, to do our grocery sales, or grocery shopping. There are other verticals like bookstores, for example, that has already seen a different kind of transformation, but we will not focus so much on them today. There is a need today for all retailers to be present in all kinds of channels where we shoppers want to go to see, to understand, or to look and feel. Touch and feel is still a very important part of retail. However, the online experience is driving the transformation needed in retail in almost all markets and all segments in the world. And why is that? What is it with the online experience that is different and that is causing us shoppers to expect a different experience when we go into the stores? Well, first of all, as we can see here, promotions are very easy to find when we go online. It's on the first page. We see immediately we are attracted to different kind of messaging. It can be personalized messaging. It can also be just a general message. It's also very easy for us to find the product we are looking for. There's always a search function, and we just put in what we are looking for, and we will immediately be directed to that product. We have access to product reviews. How popular is a certain product in relation to other products? And all the information about that product is available just by a click. Aside from that, the interesting thing with the online is that it never closes. It's open 24/7. We can decide, we shoppers decide, when do we want to go and look for something. And the information displayed, the price displayed, is always the price we pay when we check out. And on top of that, we never stand in line when we shop online. So it's a very convenient way of shopping. But still, we don't do all our shopping online. But when we go to the physical store environment, we now have a different expectation on our experience. And this is one of the key drivers for the need of transformation in the industry. We talk about the transformation of retail. There's also another word often used, or the smart retail. So we will spend a few minutes on talking about what is that. Online shopping is driven by algorithms. The amount of data available to an online retailer is tremendous. They know exactly what we are looking at. They know exactly how much time we spend looking at a particular product. They know exactly what product we take and put in our basket. And they know exactly which ones we actually end up paying for and which one we leave behind. And this is an amount of data that make online retailers very efficient in addressing us as shoppers. In the physical store environment, this has not been a criteria in the past. Today, retailers are looking to utilize data also in their brick and mortar stores. And what will they use it for? To enhance, to make store operations more efficient, to improve the shopper experience, and to meet the expectation, the new expectation of the shoppers coming into the store. They're also looking to accelerate inventory management. What we see today is a large number of devices entering the stores. And why is that? Of course, now we need to find ways to collect data. And then, of course, we need to analyze the data and eventually make use of that data. But the collection of the data is not trivial without collecting points. I'm sure you have all seen all the recent news about robots being placed in stores as trials, different kind of tracking devices, beacons, all the digital screens that will enable the message to come through to the shoppers. But the consequence of this is, of course, that the in-store data collection and the communication that arises from all these devices will drive noise and interference in the radio environment in a store. The Wi-Fi frequencies, the different open radio channels will be packed with communication as we move forward. For Pricer, reliability is in the core of our platform. So we offer to customers a platform for in-store digital communication. We offer a digital screen, a shelf edge label that sits nearby the product that can display all kinds of information on demand by the retailer. Of course, in a radio environment, there is unpredictability with regards to the duration, the lifetime of a system communicating here. All our competitors today communicate in different frequencies of radio. The uniqueness of the Pricer platform sits in the technology choice. The choice of technology that was made already in 1991 when Pricer was founded. Pricer has been listed on the Stockholm Stock Exchange since 1996. And our offering today is based on the technology choices made already at that time. It's an optical, wireless communication that is in the near infrared frequency band. So today, we can offer a reliable communication between the back office and the products, the digital displays near the products. It's interference-free. So whatever information you want to pass on to be visible for your shoppers will get to its destination without being interfered by all the other radio signals now flying through in the stores. The light, the speed of light, the capacity of communicating by light is enormous. Our capacity to reach destination, to do real-time transmissions is thanks to our choice of technology. We are also, as a side note, most sustainable. We have the lowest energy consumption thanks to the choice of technology where we require very little energy to listen to communications in the store. Why is this important? Why do we talk about this? Because the system we provide is based on a label. The label it's not based on, it contains a label nearby the product to be able to get that message out to the customer. A label is powered by battery. It cannot be charged. Today, when we use our cell phones, sometimes we find we are in areas of very bad reception. We can either move ourselves around to get a better reception so we can continue our dialogue. Or we accept a bad transmission and we will see that the battery will drain much faster. But it's not a problem for the cell phone because we can go back and charge it at home. With a label that we put next to a product, we cannot charge it. The label needs to sit next to its product. That's how we communicate a message to the customer relating to a product. So it cannot be moved. So if you're in an area where there is poor reception, unfortunately, you may lose out on the message next to that product. The updates will not come through. And as we have discussed here, in this smart retail environment, the amount of data and communication in a store will only increase as we go forward. Building trust with consumers is a critical success factor in retail. There is an article in a US magazine stating that 25% of Amazon's revenues are generated by consumers that went to a store but couldn't find the product they were looking for, and then went back and went online to actually conclude the purchase. If we look at the offering by Pricer, it's a unique platform for in-store digital communication, and it's a foundational piece for smart retail going forward. At the core of smart retail, we have price automation, but we also have the very important aspect of improving store operations. By putting a digital sign nearby the product that can also communicate back to the shopper, but also to the employees. And by enabling dynamic product positioning, this way we can also help guide consumers to make sure that when they come to a store, they are directed to the product and the product can make itself seen and known. There is a huge amount of revenues being spent today online, where there is a possibility to have that amount transferred back to the brick and mortar retail. Sorry, let's see what time it is. The price automation enablement to always ensure that pricing is at the core of the shopper experience, to always build reliability with consumers, and to be able to do it in real time. These are the core messages for Pricer. Adding to that, the consumer experience and the store operations. This is what is driving today the growth in the industry, and where Pricer is capturing a very nice possibility to address the smart retail as a whole. I think we stop there.
Okay.
But, yeah.
Thank you for that, Helena. Very much so. My first questions relate to the different geographies that you're operating in.
Yes.
And in the recent time, you have spoken quite highly of the North American market.
Yes.
And can you perhaps guide us and explain a little bit why you think that the North American market is somewhat behind many of the European markets? For instance, if you relate to the Norwegian market or if you relate to the French market.
And that the communication at the shelf edge in North America is much more theatralizing than in any of the European markets. There's lots of messaging on take 3, pay for 2, lots of colors. All of that has not been able for a digital label when it was only black and white. It could not communicate all these features. In 2015, red color was introduced as part of a graphical display, meaning that on the shelf edge, we can now communicate messages in black, white, red, black, white, yellow. That was the trigger to get interest from North American retailers. That triggered that market. And then on top of it, we have this transformation by Amazon in particular that is driving the need to meet the online experience, to be present in the various the physical platform, the online platform, and this is driving today the experimentation by North American retailers in the smart retail. In the Bloomberg article, we could read about the experimentation with robots to capture data during the day, to understand what does the physical store actually look like. Being able to then take all this data, analyze it, utilize it, and send messages back to the consumer. That is what is driving the need for a platform for digital communication. And it's as vital in North America as in other parts. There are aspects in North America on the radio side that makes our platform highly competitive. In North America, the radio frequencies are allowed to shout very loudly. So communicating by light surpasses all that challenge to actually reach its destination in a store.
Thank you for that. And in recent time, the M&A activity has been quite low in the sector. Do you think that this could increase going forward, or do you think that most competitors and also Pricer itself are quite happy with simply seeking for growth internally?
There is because this is a growing industry, because the smart retail is happening in North America and in other places of the world, there is great opportunity for organic growth in this space. However, adding to that, as the solutions become more advanced on top of the platform, of course, the need for software applications, different kind of ways to analyze the data, to make use of this data that is now being collected and transfer it into something that is creating a real true value for the retailer. That is, of course, something that can drive certain consolidation in terms of how you add things like building blocks on top of one another. That is a likely scenario. For the ESL players themselves, players like Pricer providing the platform for in-store communication, the consolidation is not so easy because of the different choices of technology, because of the different protocols that are being used. It's more likely to see it as a building block that we continue building different applications on top of, depending on what kind of devices are actually being in the end adopted by the retailers. Will the robots in the end actually be adopted or not? It is still a big question mark. Having robots deployed over a wide geographical area is not easy. The maintenance, it's very challenging. And so the times will tell exactly what devices will be used. And a company like Pricer sits in the core, and we can work with all of these devices.
Thank you. And a question regarding the gross margin. So historically, gross margins and also sales are two metrics that have fluctuated quite largely on a yearly basis. How should we think around the gross margin? What sort of are driving those metrics? Because in the recent time, they have increased quite substantially if you just compare it to a year ago. What speaks for the current gross margins and also what speaks against them?
It's a very interesting question. Historically, Pricer has been a hardware provider. The industry is transforming to solutions. So Pricer is now proposing to customers solutions based on a very strong and reliable core platform. Gross margins in the software side is typically very different from gross margins in the hardware side. And that is, of course, a mix that will impact a company like Pricer as we move forward. If we look at the current situation, there are many parameters actually defining the gross margin of the system. Large customer contracts tend to have a slightly different gross margin than smaller to medium size orders because they are very different. Consumer electronics is an industry where the signs are typically much larger than in the grocery. And a larger display may drive higher gross profit, but the actual gross margin as percentage of the revenue is lower. So there is lots of mix effects that move into the actual size of the gross margin. Why was it different last year compared to this year? But if we look as a trend going forward, hardware is not what will generate the expansion of a gross margin. The expansion of the gross margin will come from services, solutions, actually taking a bigger chunk, providing to retailers an end-to-end solution in the smart retail based on this core platform that we have developed since 1991.
Thank you. And as a final question, Pricer is a company that is rather scalable, which the recent years' margin expansion has suggested. And if you had to choose going forward, would you like to focus on growth or to expand margins? If you had to choose, it's always hard, and most companies want to achieve them both. So sort of my question relies on what should we focus on going forward?
To some extent, it's not necessarily only the choice for Pricer. It is actually the industry that is transforming in so many different ways. When you have a hardware provider of some kind, that can be treated quite isolated within a retail chain. You can deploy a certain type of hardware in 5, 10, 50% of your stores. When you're adopting solutions on a broader scale, it is more important to have a similar setup within your entire chain. So the transformation we are seeing is actually moving from store-by-store deployments to more and more chain deployments. And this is a huge shift in the industry. And it is because as the platform is now becoming core for something much bigger in the store, for the smart retail, for being able to actually compete with the online players, to compete with the different markets. There is a much bigger need to address in-store efficiency, the store operations, the consumer experience. But when you do that, you do not want it to be different from one store to another. When you move into one store in a chain, you want you want your experience to be similar and to be recognized when you move into another store of that same chain. That is now becoming a competitive advantage for the retailers. And that's why we do see the procurement processes are getting longer and longer because they are getting more and more complex. And the investments are getting bigger and bigger. So it's not necessarily a choice whether you address the market or not.
Excellent. I think our time is up. So a big thank you to the audience and of course to Pricer and Helena for attending today.
Yeah, thank you.
Good day and welcome to Introduce Investor Days. My name is Rickard Anderkrans. I'm a healthcare analyst at ABG Sundal Collier. I'm very happy to present BergenBio here to present and welcome the CEO, Richard Godfrey, on the stage.
Thank you.
Thank you.
Thank you, Rickard. My name's also Richard. Richard Godfrey, CEO of BergenBio. Thank you to ABG for inviting me to present and represent the company here. So we're a biotech company from Bergen on the west coast of Norway. We're publicly traded on the Oslo Exchange, so I should draw your attention to the usual disclaimer and forward-looking statements. So we're an oncology biotech company. Now, in spite of recent innovation and developments in the field of cancer treatment, cancer still remains the number one healthcare problem in the world, taking account for more than a third of deaths worldwide. I'm really proud that BergenBio is pioneering the way in which we can stop cancer from becoming aggressive. Aggressive cancer is ones that no longer respond to drugs, that's invisible and untractable by the immune system, is able to spread around our body and seed the secondary tumors. These are the really dangerous cancers, and these are the cancers that kill people. So we've been working for many years, more than a decade or so, trying to understand on how the cancers survive, even though we're treating them very aggressively with chemo agents, or we're turbocharging our immune system to go and hunt down and kill cancer cells. How is it that they still survive? And we've discovered this thing called AXL. It's a protein that sits on the cell surface, and it mediates survival programs in the cancer cell. And today, we remain at the forefront of understanding the role and function of AXL in making cancers aggressive. There's lots of science. I've tried to minimize it, but I want to really convey the fact that we truly are the world leaders in understanding what makes cancer aggressive. Today, we have 3 inhibitors of this protein called AXL in clinical development. We have a one-a-day pill called bemcentinib. We have an antibody drug called tilvestamab, and we've licensed the development of an antibody drug conjugate, which is basically an antibody and a chemo agent combined together. We've licensed that to a Swiss biotech company. We have demonstrated that our drug works when you take it on its own, when you take it in combination with chemo agents, and when you take it in combination with these new immune modulating or immune oncology agents. We're quite focused to demonstrate proof of concept in, and indeed go through to market in leukemia and also in lung cancer, although AXL inhibition holds the potential to be the cornerstone, it truly does, to be the cornerstone of cancer treatment right across the board. Patients who are unlucky enough to have a high expressor of AXL are the patients who have the worst prognosis. And by inhibiting AXL, you can change their prognosis so that they can have what might be a much better life expectancy. As I said, we're listed on the Oslo Børs. We have quite extensive clinical collaborations with the company that's probably the number one oncology company in the world, and that's Merck, in particular with their blockbuster drug called Keytruda, which is the number one in this immune modulating, immune promoting drugs. Although we hail from Bergen and we have a research team in Bergen, just a small team in Bergen, most of our operations take place out of Oxford in the UK. And so I somehow split my life between the 2 centres. So what is it that we mean when we say cancer's aggressive and AXL mediates this survival program? Well, what I'm trying to explain here is this is a cancer. It's a lump that's growing somewhere in your body, and it becomes inflamed. You get immune response. You even take chemo agents, and you start trying to kill the cancer cells. And that works to a certain degree, but invariably it comes back. And when it comes back or it doesn't respond, it resists the drugs, it spreads around the body, and it's invisible to the immune system. What we know is when you give chemo, radiation, targeted agents, it promotes an immune response, and you get immune cells penetrating the tumor. They're called tumor-infiltrating leukocytes. That's the warhead of the immune system, getting inside to the tumor, trying to kill the cancer cells. But cancer's really clever. It's very, very well developed. And on the cancer cell, you get these proteins sticking out on the surface that are able to mediate various responses to what's going on in the microenvironment around them. AXL is one of those proteins. What we've learned now is not only is it upregulated when this environment becomes hostile and allows the cancer cell to escape, hide from the immune system, and tolerate the chemo or hypoxic environment, it also drives AXL to be present on the immune cell and switches off various parts of the immune system. So even though the immune cells can get inside, they can't do anything. They're inactive because the cancer is able to switch off and stop the immune response right at the core of where cancer is dangerous. Now, we've done a lot of research over decades now to show that, but what was really exciting, just a few weeks ago, we were able to present this data for the first time. Here we've taken a biopsy from a patient, and we're able to look at the different cells inside the patient's tumor and stain them for different proteins so we can see the different cells. And when we magnify and then use some image enhancement technologies, what we can see is there's particular elements of the immune system that become AXL positive. And when they're AXL positive, they're switching off and they're dampening down the immune response. This is really, really dangerous because you've got the immune cells penetrating into the tumor. They should actually be clearing away the cancer cells, but they don't work. So this is a patient who you wouldn't expect to respond to immune boosting drugs like Keytruda. But in actual fact, this patient here saw a shrinkage of 50% of their tumor for 95 weeks and is ongoing. That's quite a remarkable result and something that wouldn't be expected. And how do we do that? With a simple one-a-day pill. All the biotechnology and all the innovation goes to understanding the biology that makes cancer aggressive and then developing a drug that only inhibits AXL. If it only inhibits AXL, it doesn't really have any effect on any other proteins in the body, and therefore it's well tolerated. So we have a really clean safety profile. We've now been in more than 250 patients without any serious adverse events. And it's just a simple one-a-day pill. As I said, our showcase is in leukemia and in non-small cell lung cancer. They're the two largest hematological and solid tumors, but it's quite applicable across the board in almost every different tumor you can imagine. Just recently, a few weeks ago in actual fact, the FDA recognized the innovative nature of what we're doing and awarded us something called Fast Track. That's their way of signaling to companies like ours that they think that our drug, bemcentinib, has real potential to help patients who have no other treatment options. And what they say is, we'll give you Fast Track, we'll give you access to our assessors, we'll give you advice, we'll open the doors so that we could have accelerated approval and rapid routes for these drugs can be available for patients who really don't have any other option. So we're very, very pleased to have that. In addition, we also received orphan designation, which gives us enhanced commercialization rights and extended patent protection. So as we stand today, having worked on this drug for 8 years or so, is we're poised to start the late-stage development, which means the last round of clinical trials before we can apply for marketing authorization and hopefully start selling the drug on the market. So there's still a few years to go, but having understood this biology, developed the drugs that inhibit it, gone through all of the early testing, we're now poised to go for 2 indications that are really, really significant unmet needs with great potential. This is best communicated in a pipeline. So here's the drug, bemcentinib. This is the indication, second-line leukemia, both as monotherapy, but also in combination with chemo. Second-line lung cancer. Well, lung cancer is a massive disease treated in lots of different ways, with chemo, with these new drugs like Keytruda, and also, of course, with a combination of chemo and Keytruda. So we're testing our drug in all of those settings, and we'll be able to turn the card on all of these middle of next year. I'm going to show you some data just from that first cohort whose patients have failed on chemo. And I'll show you how well Keytruda performs when it's combined with our drug. Of course, we're not alone. We've been working on this for a long time, so have others, but we remain in the lead by quite a long way. The way in which we should understand cancer drugs of the future are drugs that are very selective, that only stop the cancer from surviving, and not broad-spectrum chemo agents that kill every cell that they come in contact with. Maybe it's a cancer drug, a cancer cell, maybe it's not. So our agent is highly selective for AXL. AXL is only expressed on aggressive cancers, and as I say, we're coming to the end of the phase 2, about to start the phase 3 studies. So selectivity is important for safety. It also means that we can identify patients who have an AXL-positive disease. And this is where it gets really clever. We've developed some biomarkers and now some diagnostic tests, so we can identify half the patients who have got an AXL-positive disease, and in future, we'll only treat them and indeed the healthcare providers will only pay for the patients who have an actual positive disease. If you give your drug to everybody, everybody gets the side effects, but only a small proportion gets the benefit. If you can find the patients who have got this axle-driven disease, you then give them the right drug, and hopefully a large proportion of those patients get very better very quickly, and we don't waste time, money, and of course patients' lives with drugs that won't work. So safety, biomarkers, and of course the other real value is that cancer is very challenging. So even if we can slow down its progression, we still need to add in other drugs to really clear the cancer away. We can combine our drug very effectively with all classes of drugs so far. So we're leading with bemcentinib. The Japanese biotech company called Daiichi Sankyo have developed something that's similar but still way behind. Genmab in Denmark have got a similar drug, and then a number of other firms have got less selective drugs. That means that they have some activity against AXL, but they have activity against many other proteins and many other side effects. So, acute myeloid leukemia. Well, it's the largest adult leukemia that prevails, and in spite of recent innovations, the 5-year survival rate for these patients is still quite pitiful, maybe 5 or 8%. It really is a very, very serious disease, and it's called acute because it means that it rapidly onsets and patients get sick very, very quickly, and regrettably they die very, very quickly. It predominantly occurs in elderly patients, and this is where we see great opportunity. We've tested our drug as a monotherapy. Patients who are very sick, they failed every other line of treatment, and they simply take our pill once a day. We've also been able to identify the subset of patients, it's just over half, who have axle-driven disease. They're the patients that show great benefit, where we see almost, 43% complete response. That means their leukemia is completely gone. And the median duration of response seems a relatively short period of time, but we have to remember that this disease is an acute disease and potentially life-threatening. Patients often die within days or weeks at this stage when they come onto our treatment. And we've also seen some patients surviving out to 5 months, and we've got some fresh data that shows even greater. But when we add in a low-dose chemo, this is called low-dose Ara-C, it's an old-fashioned chemo that's been used for a long time, and it's used in very low dose in these patients, we see that we get a similar complete response rate, but the duration now is exceeding 8 months. This becomes really very, very, very useful for these patients who otherwise don't have any treatment option. Indeed, just as an aside, about 4 years ago now, I met one of the first patients who came onto this trial, which is quite unusual as a sponsor of a clinical trial. He was a charming man in his late 70s who really had resigned himself to the fact that he had a serious disease and was going to die. He started taking our medicines and said, anything that I can do to help. The last I heard, he was going on a cruise with his grandchildren, and the doctor was concerned that he wasn't coming in for his appointments. That still gives me bumps on the back of my head. I'm a pharmacist. I've been developing new drugs for 35 years, and to actually have met that person and have these stories is really quite remarkable. So lung cancer, by contrast, is a huge, huge disease. More than 2 million patients a year. And still, in spite of recent innovation, this 5-year survival rate in the vast majority of patients is very, very low indeed. We still haven't cured lung cancer. It's a very serious disease indeed. And of course, it's a gigantic market. I mean, it's somewhere in the region of 16 billion a year just for treating lung cancer, poised to go to 24 billion. And a lot of that is driven by these immune-oncology drugs such as Keytruda. Indeed, I think Keytruda is currently earning Merck about $1 billion a month. So, how do we treat lung cancer? Well, in just the same way as I said, we find the biomarkers that drive the disease, and then we see if we can find drugs that target patients with those biomarkers. What we know is all of these, no matter what the driver and what the drug, all of these have a limited survival benefit, somewhere between 0 and maybe a year, after which the patients progress, the tumor starts to grow. The tumor gets used to the drug and can live in that environment. So this second-line opportunity is the real unmet need. And this is where our trials are positioned now. We add our drug to the immune checkpoint inhibitor called Keytruda, and we're seeing quite remarkable results. I won't go into too much detail with the results, other than to say this is a survival plot with time along the bottom. and obviously the patients. The median point is the 50%, when half the patients have progressed. And what we can see is patients who do not have an AXL-driven disease have a median progression-free survival of just 3 months. That's all that happens. They take the drug, nothing really happens for a few months, and then the tumor starts to grow back again. When we add our drug to Keytruda, it moved out to 8.4 months, nearly 3-fold extension in progression-free survival. Now that's a really important measure for patients. How long am I going to stay well? How long is it going to be before my cancer comes back? Progression-free survival. But what's really important, of course, for the cancer patients is overall survival. How long am I going to live? I know I've got cancer. Median overall survival number is the one that's really important. And I can tell you here and now, we haven't got to that point. Half of our patients haven't died yet. So that's good news. The longer that time lapse is, the better the news. If we can compare that to other drugs that are also being tested in this space, in particular Keytruda, what we see is that they're all around this 3, 4, 5 month time point. Nowhere near this 8 months time point for PFS. So we see a 3-fold improvement in patients that we can identify with our biomarker, and that's more than half the patients, and 4 times what might be expected for Keytruda on its own. So we've got a large focus on bemcentinib, the 1-a-day AXL inhibitor. We're also developing an antibody against the same target, and that's because there are many other diseases that are also mediated by AXL, and we wouldn't want our drug to be used in all those other indications and see some what they call sort of economic contamination, being the price of the drug being fall to the lowest possible denominator. So we're developing other drugs in this space as well. And as I mentioned before, we've also partnered to development of an antibody drug conjugate, and that's under somebody else's sponsorship. As a business such as ours, we don't have any revenue of note. Our revenue is really clinical data, clinical science, and our profit is good results. So we have to think of it in those terms. We are, of course, contingent on equity to raise money and to fund the organization. And probably one of the more important aspects of my role is to ensure good custody of our cash as well as the operations of the business. And we can see fairly constant profit over recent quarters and fairly constant reporting. And of course, it's very important for investors to know that the vast majority of the investment is going into R&D and not into admin and overhead. So we always try and disclose that. So maintaining a cash flow so that we can continue operations is critical. We had a small capital raise earlier in the year, and we finished Q3 with nearly 300 million krona, or $32 million in our account, which is about the equivalent of 4 or 5 months of cash burn. So don't just take my word for it. We can also reference analysts who are extremely well-informed and learned in the space. We have 2 analysts in the US who cover us from H.C. Wainwright and Jones Trading, and also the Scandinavian banks, including ABGSC, also cover us as well. So you have access to that analyst cover. And from our website, we also sponsor some analyst coverage as well, so that you can see that at the same time. Of course, keeping everyone informed is critical, and it's with great pleasure that we come to the end of 2019, and I'm able to confirm that every single significant medical congress in leukemia and lung cancer, we've had high-profile presentations back in June, July, September, October, November, and even this weekend at the American Society of Hematology, we're presenting some updates on our leukemia study. So very, very active presentation. At SITC, a few weeks ago, we had a very high-profile presentation, one of the plenary presentations in front of maybe 3,000 people in what was almost like a soccer pitch auditorium, because our data and those images that I showed you earlier is so fundamental to what makes cancer aggressive. So with that, I'll close. Thank you for your attention, and open for any questions.
Perfect. Thank you very much, Richard. So I will be holding the Q&A session for now. So first of all, you pursue a companion diagnostics path, obviously with the biomarkers. Can you say anything about how that usually impacts success rates going from phase 1 to an actual marketed product?
Sure. No, great question. And the answer, of course, is significant. Phase 1 is the safety study, and it's not really relevant to look to select patients there based on biomarkers. But as we go through phase 2 and phase 3, there's a significant improvement. In fact, I think it's a 3-fold improvement from 2 to 3, and I think it's a 4-fold from 3 to 4 in terms of success in clearing the mark. Of course, you have to remember that's developing 2 different products. So whilst they're linked, they're 2 different products. So it does require 2 different development programs, but the benefit is both in success in clearing the regulatory hurdles, but also in reimbursement. Typically, you can anticipate 25 to 40% higher reimbursement, quite simply because we're not wasting our drug on the patients who don't have an actual driven disease.
Yeah, so reimbursement from the insurance companies and,
Yes.
and such. Yeah. So looking at the data you presented from the non-small cell lung cancer, sort of the phase A part there. Obviously, you showed very strong data, but the patients were not pre-treated with Keytruda, the checkpoint inhibitor. But you have that data coming up.
Yep.
Do you believe that that data will be even more important to look at, and can we expect similar efficacy outcome in terms of response rate and the duration of response, for example? Or do you believe we should set the threshold a bit lower when analyzing that upcoming expectations there?
So what we're talking about is obviously treating patients who are particularly at this end of the spectrum who previously were not eligible to a checkpoint inhibitor because they don't have the biomarker for the checkpoint inhibitor. So they just received chemo, they failed, they really don't have any treatment options left, so they were taking Keytruda. And I think the important thing to remember, and I didn't have time to disclose it, is that 55% of the patients in our study were PD-L1 negative, and another 22% were PD-L1 10%. So it's really the patients who you wouldn't expect to respond to Keytruda. And we were able to turn that response around. I can overlay this with a PD-L1 high, and it's almost exactly the same. These are the patients with the best outcome. These are the patients up here who maybe have something like a 45% response rate to Keytruda. So your question is, should we expect that when patients have failed on Keytruda, and they're re-challenged with it and they take our drug, will Keytruda work? Well, of course, that's the panacea. That's what Merck would love. You know, Merck is treating the vast majority of these patients with Keytruda. It works anywhere between 0 and maybe 12 months, and then the patients fail. Merck wants to know, how can we make these patients benefit longer for our drug? And of course, we think we have some of the answers because it's based on why is the immune system not working? And it's because of the AXL positive macrophages. So these trials in these other cohorts are ongoing, as we mentioned here. IO refractory, IO chemo refractory. We're reporting out during the first half of next year. To give you some steer on it, we have high level of confidence that we're going to see equally interesting, exciting data.
Perfect. Just finishing question. Could you give us some information on your background, what you found interesting with BergenBio, and perhaps even give us a bit of your vision for the future as well for the company?
Yeah, great. Thank you. So thanks for the opportunity. So I think I mentioned earlier, I'm a pharmacist. I've been in the industry for 30 years. Started life as a scientist, sort of moved through various roles in big and small pharmaceutical companies. Originally from the UK, I was in Switzerland for a while, then out to the States, and then family decision. My wife was from Bergen, QED. Happy wife, happy life. Yeah. Moved to Bergen, and that's when I met Jim Lorenz, our scientific founder. He's an American. He also ended up in Bergen. He's an academic researcher, and he was asking that really hard question. Why is it that when we treat cancer, invariably it comes back, and when it comes back, it doesn't respond to drugs? And that led him to this thing called AXL. And of course, once he saw it, he kept finding it and kept finding it and kept finding it. So I met Jim about 11 years ago. It was really interesting. He's a charismatic scientist. I said, this is really important. By inhibiting AXL, we're not killing the cancer cells. What we're doing is we're stopping them from surviving. And it's subtle differences that make all the difference. This is what's going on in here. Okay? The immune system clears it, but AXL actually stops the immune system from working. So you can see I'm still excited about it because this is really fundamental. This is what actually makes cancer aggressive. So where you often see and hear in the media that cancer is going to become a chronic condition, and we're going to be treating it with one drug and then another drug and then another drug in the same way as we live with AIDS. I truly believe that's going to be the case for cancer. And my grandchildren are going to say, what was the big deal? And the big deal was the fact that we understand now how cancer survives. And being able to stop that, we've got a good chance of being able to treat it and clear it as it gets smarter and smarter. Because this is fundamental. There's lots of questions you could ask me about, is AXL ever mutated? Are we ever seeing different forms where the drug won't work? And we don't now, because we're addressing the fundamental mechanism. This isn't something that's switched on by cancers to avoid a drug. This is a basic survival program. In fact, if we have a minute, this is also the same survival program that viruses use to survive as well. So Ebola and Zika viruses, two of the highest profile at the moment. In fact, during the Ebola outbreak on the west coast of Africa 4 or 5 years ago, the World Health Organization, the Wellcome Trust, the Gates Foundation scoured the world looking for agents that were effective. They shortlisted 3 to be tested in a level 5 containment suite to see if they could treat it. Ours was one of those 3, and it worked very well. As we know, they've now developed a vaccine against Ebola. Guess what? It doesn't work. We're seeing the outbreaks right now. It doesn't work for the same reason. The vaccine targets the T cells to go in and kill the Ebola virus, but Ebola uses AXL and interferon gamma as a way of avoiding it. So what's this space? It's really exciting biology. And that's because it's fundamental to the way in which alien cells survive inside our body, whether it's a viral infected cell or it's a cancer cell, or indeed maybe it's fibrosis, scleroderma, COPD, all of these diseases that are, well, sometimes we've got autoimmune or immune evasive. It's because of this.
Perfect. Thank
Very
you,
good.
Richard.
Thank you very much indeed.
Thank you all for listening.
Thank you.
Okay, let's continue. My name is Jesper Birch Jensen, and I work as an analyst here at ABG, where I follow companies like Safeture. And with us today, we have the Safeture CFO, Helena and CEO Magnus Hultman, who's going to tell us all about Safeture and their exciting plans for the future.
Perfect.
Please go ahead.
Thank you very much. So hi, everyone. I'm Magnus. I'm the newly appointed CEO of Safeture. So I just joined here about 4 months ago. And before this, I've been the CEO and engaged in 4 different startups. I was nominated the Entrepreneur of the Year here in Sweden last year. And my last company called Strossel, it was just awarded the fastest growing tech company in Europe for Deloitte Fast 500. We grew the company with over 19,000% in 4 years. So that was in the media industry, a very exciting industry, but quite a tough one. So I decided to find a new industry and decided to go for security. So here I am. And with me, I have Linda, who is my CFO and also fresh on the job. So we're 2 new guys in a public environment. So bear with us. Perfect. So Safeture. Actually, it was called GWS Production before, and that was Global Warning System. That was the previous name of the company. But then Greta Thunberg came along, and everyone started calling us Global Warming System. So we needed to change name. So that's why we have Safeture. Let's pick this up. So I'm going to talk to you guys today about how to win a category. And that is quite some task that we have ahead of us. But I'm going to try to define what it is and explain how we're going to win this category. What we offer is an employee safety platform. It's duty of care for demanding customers globally. So, what do we do? Well, instead of me telling you what we do, I decided to let someone else explain it for you.
At IKEA, we are curious people and many of us travel. Visiting and working in new places can be challenging, but we now have access to tools and services that make travel easier, safer and more fun. The Safeture Pro app and Falk Global Assistance Service. As a business traveler, you will get 24/7 support for all parts of your journey during planning, when you are on the way and while you are at the destination. The app is actually very useful. Like, instead of spending hours waiting for a delayed departure, you can have a better and more productive day somewhere else, thanks to the alerts and notifications function. Once you have arrived to your destination, you can easily share your location. It enables the Falk Global Assistance Service to see where you are and to reach out with information that could be vital for you. Like if there is something going on that would be smart to avoid. Sometimes it can be hard to follow the local news. And if something dangerous happens where you are, the warnings function will alert you. Travel is usually very safe, but just like at home, stuff happens. It is sometimes just harder to deal with incidents when you are away. Minor car accidents or non-emergency visits to a doctor are the most frequent issues for IKEA travelers. And the most common reason to visit a doctor while on a business trip is just catching a cold. Now, even if you are informed and prepared, you might end up in a really sticky situation where you need assistance. Well, now you have access to assistance at all times. The contact information is on your Falk Global Assistance card. And you can call or email Falk before or during travel for any medical or safety related matter. And in case of emergency, the Safeture app SOS button will connect you to Falk, and the app will provide them with information on where you are. Life is an adventure. Travel and visiting new places should be fun. And with the right preparations, it will be an even better experience. So download the app and carry the card with you at all times. It is actually very small. Be prepared, and remember, it is not always cold in Sweden. It all starts with you. Safe travels.
Crystal clear? There we go. So, behind that video and behind that easiness of using our services, there is a massive complexity. There is 9 years of engineering and development in this company. This is what you see here. This is the platform integrated with HR system and travel booking systems and many other things. And there's also several patents within positioning and usability of the service. So this is a way of building up those barriers of entry for the company. And what we want to do is to have a person working in a company feeling my employer takes care of me. There is someone looking after me and my safety, because I am the most important part of a company's balance sheet. Not the machines, not the facilities, but the people. And that's the position we want. And that's the category we are looking for. And we're going to win. So, when I joined this company, I did my own due diligence, like many of you might be doing right now. And I looked at a couple of numbers for the company. So the turnover 2018 was 13 million. Swedish crowns, actually. It's 13 million Swedish crowns. They have 32 employees, but they have a recurring revenue of more than 90%. So most of those 13 millions will follow next year. They have a churn of less than 1%, which indicates they have really, really happy customers. They have users in 170 countries, so pretty much all over the world, and 2,400 customers. You know, they have built 2,400 customers and have a revenue of 13 million. When I look at that, I get so provoked. I mean, it's like, what have they been doing in this company? Because all these numbers show something really, really nice. There is a unpolished gem waiting to be polished. And on top of that, very happy customers. So this due diligence made me think, okay, what is the market then? Well, the target was international business travelers in Europe and North America. You know, that's €500 million. And that's fine, but is it really those business travelers that's the market? Shouldn't it be employees? Because how it looks like today is that you have invested so much money as a company in security cameras and sliding doors and systems for access control and much, much more. And then you go into the office and only half of the workforce is there. Because the rest of them, they're out selling, they're away on training or working from home. Every week, just here in Sweden, a person works 12 hours a week from home. Globally, 70% of white-collar workers work out of the office at least one day a week. So there is a market potential, and the market potential, that is employees. So employee safety for enterprise customers, we estimate between 6 and 8 billion euros. So, my first task coming to this company was to look at where we want to go. I mean, that's my job. And I found these 5 areas that I'm looking into and setting a plan together with Linda and together with the rest of the company. The first one is that we need to go from being an IT company to a software as a service company, because all the numbers are there in order for it to be a software as a service company. Now it's an organizational thing that needs to come in place. And what I mean with IT company is that if you have a customer and we say that we offer them this, and the customer says, yeah, that's good. Can we have this as well? And the engineers will say, yeah, we can build that. But in order to scale, you need to package it really, really tightly. You can't do customization. It needs to be a well-packaged product that is pretty much served in the same way to customers. That is a software as a service company. Second area is sales. Today we have field sales guys in a couple of offices around Europe, and that is great. But if you have a truly nicely packaged service, that also means that you can use other channels, like online sales. And that is something that we will start rolling out here in the coming future. Integration partners, that is a way for us to have additional sales resources. It's not us that should do all the work for the customers. It could be consultancy firm, it could be assistance companies, security providers, and others that's in our ecosystem. And several of them we have signed up as integration partners already. And there will be more exciting news here going forward. And then account management. Remember, 2,400 customers, and the average number of users for these 2,400 customers is 21 users. IKEA has a couple of thousand, and they are happy. So happy that they did their own movie. I would like to have that with all these other companies. And this is truly big global corporations on our customer list. So account management is a critical part. We haven't had it before, and now we're investing heavily in it. Marketing. Well, I am from the media industry, and we are going from a push marketing world to a pull marketing world. Push marketing means that me as a company, I'm presenting to you what I want to sell. It's what I would like you to hear. But in a pull marketing world, it's not about what I would like to say. It's about what you want to hear, right? And that is a fundamental shift that is changing everything right now. It changes how advertising is being carried out. We are in a pull marketing society. We work with something called content marketing and native advertising. It's about sharing our knowledge to users out there to find it, get it, and then get in touch with us. It broadens our way of finding customers. It also hands it over to the customer to actually make the decision. Because I tell my sales guys that when you have an incoming sales call, that is the worst thing that could ever happen. Because what they have done is they have researched all knowledge there is in the world on the internet and so on, and came up to that, yeah, I would like to speak to this company. They just need one piece of fact that is not available. That is the price. That's what they call us, because they already made up the decision. They just want the price. You can't do anything. You can't tell them that this is fantastic, you can do this and that with the platform and so on, because they already made up their mind. And that means that my sales guys, they are just living price books that breathes, and I can fire them. And I don't want to do that. So it's about sharing your knowledge and having them understand why they should use the platform the way we want. We are the experts. Development. We need to be an open platform with an ecosystem of providers, because I have the fantastic developers in the company, but we can't solve everything for the customers. There are many other companies out there that do incredible things. Why not embrace them? Bring them into our ecosystem. Let them be a part of the platform we are building, because there are truly cool companies out there. And if we all be out there chasing and saying we can build this and build that, it's hard to scale. And this is about scaling. Final part is data-driven decision-making. Well, I like those KPIs. It's called the TLAs, the three-letter acronyms The monthly recurring revenue, that's how this company stacks up. It's not the revenue for the year, it's how much monthly recurring revenue we have. That's the most important metric for this company. The ARPU is how much we make from each user of the company. Fantastic indication of where we're going, and especially for our account management team. The WOW, the weekly average usage, is how popular our apps and our portal is. We easily measure that, and we know exactly how much they actually use it. And that is a sign of how appreciated the service is. The CAC, that is the cost, the customer acquisition cost. And if we can find that and know that, then it's easy to understand how much money we need to pour in, how much money that will actually come out. And the lifetime value of the customers we have, how long we sign them up for, and how the churn is, etc. These are software as a service metrics. Very important when analyzing this type of company. So with this said, Linda, my new CFO, and here we go.
Thank you, Magnus. So I joined the company September 1st, so I'm soon about to finalize my first 100 days. And I would like to start off this presentation, or my part of the presentation, by highlighting 4 elements that I see as the most critical elements from a CFO perspective. And I will actually repeat again what Magnus just mentioned, the MRR, the monthly recurring revenue numbers. It's fantastic to join a company as a CFO where you have a reliable, recurring revenue stream every month, every quarter, every year, especially with the long-term contracts that we have with our clients and the relatively low churn in the company. Of course, it makes the cash flow planning and the investment planning much easier when you know next year I'm going to at least have this kind of revenue. But also, when you look at the money you put and invest in sales, you know that the sales investment can be almost 100% focused on increasing that MRR level, either by increasing the revenue by client, by building on existing business, or chasing for new clients. So the return on investment on your sales team is great. Secondly is the scalability potential of the company. Coming from the mobile phone hardware business, I know for a fact how hard it is to work with production and factory capacity, component availability. Here I would say at Safeture, we're not that really affected by external factors when it comes to scaling up our business. There are 3 things we need to consider though. We need to be able to handle inflow of customer questions, support function. We also need to make sure that our IT infrastructure is in place so that we can scale up our IT system when we grow our business. And finally, we also need to make sure that we have a SaaS organization in place that Magnus just mentioned, where we can actually onboard our clients cost efficiently and quickly. Moving over to gross margins. Right now, we have good gross margins in our company. It's about 60% gross margin on sales. But if you analyze and dig down into those numbers, you can see that 10% of that is actually the true variable cost connected to sales, which means that as we intend to grow our installed base of clients, the gross margin will continue increasing. And I would say in 3 years' time, we will be very close to 90% gross margin, which is a huge benefit if you want to build a long-term, really profitable company. And again, I put up the market opportunity that Magnus has already mentioned. The market out there is huge. Okay, so where do we see ourselves in the coming years? We've just finalized our mid-range plan, and we will kick off in building this SaaS organization right now at this moment. And the biggest investments will be made in sales and in building marketing. And that will have a quite quick effect on our revenues. But it will also come at a cost. So we will also, for the closest 2 years, see profitability go down when making these investments. But in year 2022, I think that is the year where the company really will take off, both sales-wise and profit-wise. So we now expect sales in 2022 to reach 100 million SEK, with a profit level bottom line of 20%. And by then, we truly can be classified as a Rule of 40 SaaS company. So for those of you who's not familiar with the Rule of 40, it's a common KPI that they use a lot in the US for measuring the trade-off between a quick growth while maintaining a profit. And you calculate it as adding your growth percentage of your revenue with your profitability percentage. And you should be above 40 when adding those two parameters together. Looking at American SaaS-listed companies, it is very clear that the most successful SaaS companies that are out there in the US, like Salesforce, Workday, Shopify, etc., they are well passing this Rule of 40 line. And I'm sure that if we would plot the same kind of chart for the Swedish SaaS customers, I'm sure quite many of them, if not passing, very close of passing the Rule of 40, like Lime, Fort Knox, and definitely in 22 Safeture will be one of these companies. Another aspect for the Rule of 40 is that there is a clear correlation between companies meeting Rule of 40 and the valuation of the company. And plotting the same American companies again, you can see that the revenue multiple of the companies passing Rule of 40 is double to the size of companies that is not passing the Rule of 40. We are there for our end clients, and that's the most important thing, to create value for our end clients, but we are also here to create good values for our shareholders and for our future investors.
Perfect. Big thanks, Linda. Both some words about the company and also our position in the market in this exciting industry. So to sum this up, I believe we are very well positioned to win this category with employee safety. We have the products, we have the infrastructure, and we're building the team to deliver on it. We are in a very interesting and fast-growing market segment. There is more and more dollars coming this way. They know that to maintain and retain and attract talents to companies, it's not just about the paycheck. We leave it to the taxman anyway, right? So it's about investing in other additional benefits. And caring for an employee is one of those aspects, and very, very important. And we have a scalable software as a service business model. With that said, with that said, let's take a social media break. And that means that feel free to pick up your phones, and that's the hashtags you want to use. You can add me on LinkedIn as well. I share a lot of stuff there, so it could be an idea if you're interested in the company to follow Safeture or me. Jesper.
Thank you, Magnus. We're running a little bit short on time, but I'll do a few questions, not all of them. First off, how do you go about transitioning a company which has been very heavily R&D and engineering focused towards the SaaS model, and how do you get the company on board with your plans?
Yeah, you mean except for all the frustration every day now? There's definitely things to do. I mean, I love the spirit of engineers because everything is possible. You can absolutely build anything in the world. And that is just a great thing. But it's also about trying to hold them back and say, well, maybe you can make it a bit nicer or cooler or look better, actually. And that's an everyday struggle to do that. And also to get the salespeople to understand what the packaging of the product is. Because it's one thing that they understand it, but it's about when you need to understand it. How should you present it for a customer? Is it the HR manager? Is it the security manager? The risk compliance manager? There are several stakeholders, and there's different messages to these different people. And it needs to be clear and very clear.
And last question, there was recently a takeover offer for Safeture by one of their majority owners. And how are you working with them and with their long-term plans? And do do they correlate with your plans, so to speak?
Yeah, that's right. We just had a takeover bid from Adma Group and Greg Dingshan for the company. They went over 30%, and they acquired another 30% of the company. So that means that we are livegna in the company, and they have a majority in the company. Right now, we're looking into that. But I can say they are really, really cool guys. I'm so happy to have a strong investor in the company that believes in us and believes in the plans of the company. And one thing for sure, I joined this company in order to set a strategy, not to inherit a strategy.
Thank you, Magnus and Linda, for coming here.
Thank you.
Tack.
All right, we'll start here. Good afternoon. Welcome back. Hope you all got some lunch. You're ready to listen to more companies this afternoon. So my name is Oskar Wikström. I work as an analyst at ABG, where I follow Alcadon. And today we have Sonny Mirborn with us, who's going to present the company. And I just leave it to you. Go ahead.
Thank you. Welcome. I've been with the company now for a few months. I hope after this presentation that you get a clear view on who we are and what we do. In general, we are a supplier of systems and products for network infrastructure solutions or data communication solutions. We've been around since 1988. Since that time, we have been present in all major technological transitions in our industry. We were there during the fiber rollout of the 90s. We were there during the rollout of 3G, 4G, and now the broadband market, or FTTH, fiber to the home. We have also been active in the data center market the last few years, and now we look forward to rolling out 5G in Sweden and Norway. I think looking at our history, it's primarily the last 3 years who shaped us into what we are today. We made a few acquisitions. In 2017, we acquired Data Connect and Svagströms Material in Sweden. Last year, we acquired Cablecom in Norway. And looking at what these acquisitions made to us, you can say that they added related business areas. We got cross-selling opportunities and, of course, cost synergies as well. But I think it's most important about our acquisitions is that we strengthened our position towards our existing customer segments. This year has been an eventful one. Myself and our CFO, sitting right there, assumed office. We experienced a downturn in the broadband market. We implemented a few efficiency increasing measures. And today we have I would say, an updated management team. And this new management team consists of individuals from both our geographical markets, individuals with a long history within Alcadon, a long history within our industry. But we also have representatives from our most recent acquisitions as well. So I think it's a good mix of people in our new management team, definitely. Today we have a Nordic footprint. The larger part of our sales comes from the Swedish market. We are growing quite rapidly in Norway as well. We also have distribution relationships in Finland and in Denmark, and this is quite important to assist our Nordic or pan-Nordic customers on a Nordic basis. Today we conduct our business within 4 business areas. I'm going to describe these a little bit more in detail later, but as you can see, our business area commercial is our oldest one and our largest one still. We have fiber networks, or FTTX, our business area residential, and services and training. I'm going to start by describing commercial a little bit. This is basically data communication or network solutions for commercial properties. Now, a commercial property for us, that could be a hospital, could be an industrial facility, it could be an office or a data center. So it's a quite broad category there. We have a complete solution here. We could be a turnkey supplier for our customers. We have both copper-based and fiber optic systems and solutions. And an important aspect of this business area is that ECS, our own developed system, is a very important part here. It constitutes about 25% of our turnover in total today. And we have about 4,000 individual installers across the Nordics who are certified and educated in using our material. So it creates a certain type of loyalty to Alcadon, of course. In fiber networks, or FTTX, where the X stands for where the fiber eventually ends up, this is also an area where we have a rather strong position. And as I mentioned before, we have had a strong position in all major fiber rollouts during our history. Broadband, 4G, 5G, those volumes ends up here. Most of the volumes concerns fiber optic cables and ducts. Our business area residential, this is a quite new business area for us. It was primarily created through our acquisitions in both Norway and Sweden. It's a high growth area for us. We have a very low market share, but we have a very nice system solution with data communication and electricity for residential properties. When I say electricity, I basically mean smart and safe homes. Another one of our own developed brands, DC Line, is also very important in this business area. It constitutes about 6 to 7% of our sales today. We are present also in both new construction, renovation, and reconstruction as well. Services and training. As you could see, this is a mere 5 or perhaps 4% of our turnover, but this is highly important for us to establish ourselves and maintaining our position as a value-adding provider in the market. This is where we educate, train, and certify our customers. We provide them with network design. We also have rental of equipment that our customer needs when they provide their customers with fiber rollouts or structured cabling in facilities. Now, why do customers work with Alcadon? We made a few surveys, one quite recently, where we asked our customers, why do you work with us? And what most of them say is that they consider us to be somewhat of a competence center within data communication or network infrastructure. This basically means that they consider us to be specialists. Now, we do not work with low-price products and low-price solutions, meaning that if a customer comes to us and wants a low-price solution and a logistical service, we might not always be the best player to work with. We work with high premium quality products. In terms of agility, I mean, that is a word that is often used, of course, but I think that we have shown over time that we have been able to adapt our business to be part of these different fiber rollouts in 4G and data centers, for example. And I think those adaptations show that we are a quite flexible company. Another thing that our customers mentioned was this in-house development of products and solutions. Primarily, they mention ECS and DC Line as top-of-the-line systems that they often and gladly work with. But we also have packaged solutions for data centers, a packaged solution for 5G to stand prepared for when that launch happens. Our business model has not changed much since we were founded, or at least since the mid-90s. I think the most important thing to mention here is the in-house developed systems, about 30% of our sales. These are systems that are locally adapted to our current local markets, which gives us a unique strength, I believe. But also, I always get a lot of questions regarding manufacturing. Do you have your own manufacturing and production? And we do not. The global market for production of these type of systems is highly competitive, and we don't see any reason as to why we should have any own production facility. Now, we combine this with distribution relationships, where we represent globally well-renowned manufacturers, niche manufacturers on the Nordic market. This is very good since a lot of these players are world-leading within their niches. They use a lot of capital every year to invest in R&D. And having these relationships, these exclusive relationships, it helps us making sure that we never miss a technological trend. It gives us a certain type of flexibility. And in this flexibility in combination with a unique system approach, it gives us a lot of value. It's very valuable for us. I'm going to talk a little bit more about the customers later, but what I can say is that we have a highly fragmented customer base. And most of our customers are small and mid-sized installers across Norway and Sweden primarily. Here are some of our more well-known customers. But as I said, it's a highly fragmented customer base. And today, we have over 2,500 active customers. And when we say active, we mean customers who are purchasing from us on a monthly basis at least. A large share of those 2,500 customers have been our customers since 10 to 20 years back, which we are very glad for, of course. And as I mentioned, highly fragmented. I think our largest customer is about 3 or 4% of our turnover. But we also have, besides installers, we have operators, data centers, property developers and municipalities and energy companies as customers. So it's quite wide client list, as you probably understand. Now, in terms of competition, on one hand, we have often global traditional wholesalers with a very wide product range. They offer primarily a logistical solution for our mutual customers. On the other hand, we have niche distributors, often quite small, often even significantly smaller than Alcadon. They often have a more narrow product portfolio, and very often they are working as distributors where they represent a global manufacturer on their respective local markets. Alcadon, we are definitely a niche distributor, and in addition to being a distributor, we have, of course, these in-house developed systems that we work with. I often get the question also about what drives your market, what makes Alcadon be a nice company in 5 or 10 years. And I thought I'll dedicate some time towards describing the market drivers for us. Primarily, there are 2 market drivers. First, we have the construction activity, the general construction activity in the market, but we also have increasing amounts of data. And if we start to talk about increasing amounts of data, you probably all heard of Internet of Things and Industry 4.0 and how that drives, the amounts of data in society as a whole. Now, these amounts of data has increased by over 30% a year the last 7 years, and it's expected to increase even further or more rapid going forward. Now, when you have increased amount of data, you need storage. When you talk about storage, you often talk about the cloud. Now, a cloud, that is a data center, essentially. We work a lot towards data centers, and we see that is a market that has grown perhaps 10 to 15% a year the last 5 years, and is expected to grow a lot, especially in the Nordics, where we have a quite favorable infrastructure for data centers. So that is a highly important area for us. Also, when you have these increased flows of data, you need 5G. So with 5G, it's not a question of if it's going to be implemented, it's a question of when. And you might ask yourself how much fiber is involved in 5G. If you compare it to a broadband rollout, you usually say it's about 2 to 6 times more fiber. If you compare it to 4G, you can compare the number of base stations needed normally. And in 4G, you require about 25 base stations per square kilometer. In 5G, it's closer to 400 base stations. Now, this is important because every base station basically needs fiber to work. So this is a very interesting market for us, of course, and definitely an important market driver as well. The other important aspect is renovation, new construction, reconstruction, the general construction activity in the market. We are active in several segments. Doesn't matter basically if it's a infrastructure investment or a public investment or an industrial facility or even housing. Even the potential looking at housing alone, we have, I think, an underlying need just in Sweden for 50 to 90,000 dwellings a year the next 5 years just to support our current population. So there's a lot of potential here, and our market share is very, very low, and we are experiencing a high growth right now. So it's a very interesting area for us, definitely. In terms of financials, we have experienced a downturn due to the broadband rollout that has halted a bit, especially in Sweden. In Norway, the situation is a bit more positive as it looks right now. However, in our other business areas, in business area commercial and residential, the situation is a little bit different. We see a more solid situation there, driven primarily by data centers and industry investments. But also in business area residential, we see a far stronger underlying growth. When it comes to our numbers, you could say also that we managed to keep a rather stable gross margin over time, especially when looking at historical numbers. Our solidity also is maintained at a rather high level. Looking at our ownership, we are quite proud to say that we have dedicated long-term owners. And I'm happy to say also that the employees of Alcadon constitute a large share of the ownership. And that is something you definitely can feel when you work within the company. These are people who are highly engaged in the success of the company, and most of them have been there for at least 10 to 15 years, which I think is a strong sign. Our board of directors, we have Jonas Mortensson. I thought I saw you there in the back. We have Stefan Charette, Marie Ygge, and my predecessor, Pierre Fors, as well, who was a former CEO. I think I exceeded my time limit now, but perhaps you have some questions for me as well.
Yeah, all right. So thank you so much. So yeah, we have time. We have some extra time for questions as well. I think one of the first questions I wanted to ask is you've been here since late summer, more or less. What have been the main areas that you've identified as areas for improvement, and what have you focused on since you started working at Alcadon?
Well, we've seen that the culture of the company is very strong. It's very entrepreneurial, very business-minded. So there's not much to do there. We have to focus on maintaining that culture and make it prosper. In terms of strategy, it's nothing wrong with the strategy as well. It's Alcadon has a set way going forward, and it's nothing wrong with that. But I think in terms of structure, we did find some potential there in restructuring some parts of the organization, and we also added this new management team to get a nicer flow of information between our different functions in the company and also between the different geographical markets. And that gives us a far more comprehensive view of some of the questions we have going forward.
Yeah, all right, thank you. And in terms of one thing I was wondering as well is, I'm not going to dwell too much into it, but FTTH, so fiber to the home, has obviously been a drag for the group, as you mentioned. You're saying you're seeing some improvements. Do you think going forward, next 1-2 quarters, is it somewhere leveling out at this level, or is it increasing from here, or how should we view this part of the exposure of Alcadon?
Well, you could say that 30 to 40% of the fiber that needs to be rolled out to reach the government's broadband targets is still remaining. So everything speaks for that fiber to be rolled out. The question is only when, and we cannot see the next few months that something is going to happen there. We hope that we reached somewhat of a bottom stage in the market, but for it to pick up speed again, we have to be honest and say that we can't really see that happening during Q1 next year either. It's going to take some time.
Yeah. All right, thank you. So next thing then, 5G, really interesting. As you mentioned, it requires a lot of fiber basically, and obviously huge potential there. What are the trends you're seeing in the market? When do people think that we'll start seeing the rollout of 5G in Sweden, Norway, etc.? And do you have a status on that or an understanding of?
I can say that I think Norway will be a little bit ahead of Sweden actually. They have had their primary auctions already. I think in Sweden, some of the auctions for a large piece of the spectrum were due for March, and now it has been postponed to the summer. So when people have asked us, when do you think that 5G will be commercialized? When will it be rolled out? We usually say that it could happen by the end of 2020. It could also happen in the beginning of 2021, but it's very difficult to say. And I think all players in this market are in agreement that it's very difficult to see exactly when it's going to happen.
Right. And does it require any other type? Is it the same cable that you use? Is it the same product as for 4G and 3G?
It's very similar.
Yeah.
It's very similar, but you need some alterations, and that is something that we have prepared for the last year that's gone by. Some minor adjustments, but in basis, it's not a huge difference.
Right. And also in terms of your own products, so it's 30% today of the group, more or less. Do you have a view there? Do you want to expand your product offering, or what's the future for the own products within the group?
Well, we have a rather nice product development department, and they work solely on our own assortment and making sure that the systems are up to date and developed. But we have not set a specific percentage of our total turnover. We are more concerned that the mix between distributed products and our own products is a good mix, and that they go hand in hand. It's more important for us that they complement each other than that one should grow more than the other.
Yeah. Okay, so you see a risk that maybe then if you focus too much on your products, then you don't have the whole offer in place.
Yeah, it could be a risk, but so far we haven't experienced that. I think the companies, the global companies that we represent in the Swedish and Norwegian markets, they view it as a strength that their distributor have their own products as well, and maintain a closer relationship with the local customers. So they are more concerned that we have our market shares intact, so to speak.
Yeah. And I have to ask as well, so acquisition's been a part of the group.
Yeah.
Your background from AdTech, so you obviously worked a lot with acquisitions yourself. So I'm just thinking, Alcadon going forward, in terms of acquisitions, is that something you're looking into? What are you targeting? Are you trying to expand outside of the Nordics maybe, or increase your product offering? What's the plan there for future acquisitions?
We have a strong pipeline of companies, and I've spoken to a handful of companies myself that are interested in becoming a part of our group, and that is of course something we're very happy about. What we have said is that we are doing some changes now during this autumn, and myself and our CFO are quite new, so we wanted to make sure that we implement these changes in a good, strong manner before we step out and do acquisitions again. And I think that's a sound strategy, so we don't do too much at the same time. If we look at where geographically we look at acquisitions, we're quite open-minded as to what we should do. But of course, if we move outside our current business, our current geographical markets, then we will try to stay even closer to our core business, product-wise and customer-wise.
Yeah. No, because the reason I'm asking is you see that fiber is underdeveloped in a lot of places around Europe, whereas in the Nordics we're quite far ahead.
Yeah.
And I was wondering if that was a route that you potentially...
That is something we're looking at as well. But we also see that part of our offer is structured cabling solutions for premises, for facilities, and that is a business that is more solid, it's more stable, and it's not fluctuating as much as a fiber rollout. So we're trying to weigh these to each other also to see which one is more beneficial for us in the long term.
Yeah, and just one final question then that I was wondering about. So the share has taken a hit this year, obviously for reasons that we've discussed. Why, in your opinion, do you think it would be a good time now to invest in Alcadon, and how do you see, your future for the next year, let's say, of the group?
I would say that I won't comment on the share, but development-wise for the company, I think we have nice market conditions in front of us, and I think that one has to understand when it comes to these fiber rollouts, looking at them from a 20-25 year perspective, you always see ups and downs, but in the long run, usually the volumes go up, and I think with 5G we're going to see a development over a longer period of time with more stable volumes. Similar to the one we've seen with FTTH in Norway, where operators sell the subscriptions before they roll out the fiber, which gives you a more stable growth over time. So we think that it will still be volatile, but over time we will see increased volumes, definitely.
And would that exposure be the more volatile compared to, for example, commercial real estate and the other exposures you have? Is the fiber part that is...
That's
because of these trends.
Yeah, the volatility comes definitely from the fiber rollout. With structured cabling for industrial facilities, for example, it's not volatile in the same way. If the general industry goes down and industrial facilities are empty, usually the cabling system or the network infrastructure is changed when a new player moves in. So no matter what happens, we will have a nice business there as well.
All right, thank you. Well, those were the questions I had. I thank you so much for coming.
Thank you.
And thank you all.
Thank you.
Ja, de har.
Han är på... Man skulle kunna tro det.
Okay, welcome everyone. Now we have Björn Borg with us, and I leave the floor to CEO Henrik Bunge.
Brilliant, brilliant, fantastic. Thank you for having us, and great that you're joining us in this fantastic fall weather that we're enjoying right now in Sweden. I'm going to bring you back a couple of years, actually, to 22nd of June, 1972. So there was a journalist that asked a young Swedish tennis player what his ambitions were. The journalist's name has long since then been forgotten, but the Swedish guy that he asked has not. The 16-year-old guy had been on the Pro Tour for 3 years. He just won the Wimbledon junior title against Buster Mottram. And as Björn was reflecting on the question, he gazed out over all the Wimbledon tennis courts, looking at the spire of St. Mary's Church far away. And then he replied very quietly, almost like a whisper, to the journalist, saying, "I'm going to be the best guy in the world." That's what he said. For Björn, it was never really a question on whether he should reach the goal that he set out, but it was more a question on the price to pay, or how much he needed to put in to get to where he wanted to go. And we have a very similar approach to the company. So rather than thinking too much about whether your ambitions are too high, or whether they're too far away, or whether the curve is too steep, we rather spend time thinking about how do we get there? What do we need to do to get there? That's one thing that I think we learned from Björn Borg. But also, of course, the brand was originated from a tennis court. It was born out of one of the greatest athletes that mankind has ever seen. And we want to bring those components together. And we think that is more relevant than ever before. Knowing, of course, that when I started Björn Borg, the underwear company was known not for the tennis player, nor for sports or activity, but for colorful underwear. Very far away from that Wimbledon dream. So we decided to bring that back, make that relevant again. And that is indeed as challenging as becoming the best tennis player in the world, it turned out. Because, of course, now I've been 5 years into the company. And I had a few strong victories, but as many defeats. But I'm still standing. And I'm still here, more convinced than ever that we can do something extraordinary with this still very small Swedish brand. The starting point really is to take a slightly different approach to the brand. So rather than thinking about how much more black t-shirt we can sell, we're thinking that the world probably rather need a brand that inspires you, so that you too can accomplish your dream, whatever that is. And of course, in a Western society where we have never had as much stuff as we have right now, but at the same time we've never felt worse, we feel that there's a room, an open window in the market for a brand that is pushing and helping and inspiring people out there, that if it's only one thing that you do tomorrow, it's probably not shopping it more, but it's training. Because training will enable you to do so much more than just the training part. And that's been our approach ever since. And of course, my background comes from sports, so it was easy to take that route when I started Björn Borg. But also we saw that the room, the arena for a sports brand is so much bigger than for one that is only focusing on underwear. So that was an immediate, strong fit. We also saw in consumer research back in 2014 that the consumers wanted to buy more from Björn Borg. Not only underwear, but also other stuff, but they just couldn't find it. So that was the route that we embarked upon back then. And again, I'm super convinced that we will manage to be successful, even though it will take some time, of course. With a background from Adidas and Peak Performance and Radio Shack in the US, I also have understood that it's not the length of your business plans or the number of consultants that you have that will make the biggest difference. It's rather to create something very easy to understand, something very pragmatic, so everyone understands what we need to do, knowing that the battlefield is not in the boardroom, it's on the shop floor. So we decided to create a business plan that is 1 page, not 2 or 4 or 156 or 2,100 as Adidas, just one. And this is the one. We said that the first thing we need to figure out, of course, is with the same relentlessness as Björn Borg, have this clear idea. What is our becoming the best tennis player in the world? and that is to build the #1 sports fashion brand for people who wants to feel active and attractive. That's our Wimbledon. Of course, we need to measure that somehow. For Björn, it was winning Wimbledon, not only once, but a couple of times. For us, it's measuring through 4 different KPIs. One is realized average retail price, which is about how willing the consumers are to buy our products at full price. The second one is engagement, which means that we want to measure our internal engagement so everyone working for Borg feels that this is the place I want to be and nowhere else. And then, of course, sales and then profit. Those are the 4 KPIs that is measuring our progress towards becoming the #1 sports fashion brand. We know, of course, that knowing where you want to go is fantastic, but you still need to be that 16-year-old standing there and have this dream to cover the grab. So, of course, when we look ourselves in the mirror, the brand is still too much known for colorful underwear. So we need to urgently speed up this transition towards something else. When we measure the same KPIs, we can say that the sell-through that we used in the past that will change to realize the average price is going okay. Engagement is super, super high. Total sales is 717 and EBIT is 71. So that's our starting point. And of course, the starting point change, depending on which day you look at it. It's constant moving. The goal, however, remains the same. And the gap in between, that's where you want to focus your resources. And we've said it comes down to 3 very simple things. We need to make sure that we win at the point of sale, that we create a winning team, and that we build one sports fashion brand. That's really it. But we also acknowledge that we need to create a strong brand, a brand that really connects with the consumers. And in order to do so, you need to have a very strong personality, we believe. And we've said that our how is really guiding us in everything that we do. And for us, it's about being passionate. It's about being empowering. It's about having that winning attitude. And of course, also being bold and magnetic. And we believe that not only did Björn Borg himself have all of those personalities, we also feel that there's a need in the market for a brand that's really sticking out. Bold in a sense that there's someone that raising their voice when something is wrong. Like when we built the tennis court at the border between Mexico and US. Winning attitude is knowing that it's not going to be easy to do great things, but you need to continue to push. Magnetic is to create a brand that people want to be a part of, create a strong community that goes just beyond just selling t-shirts. We do that through a strong internal culture with compulsory sports hour, with compulsory fitness tests, really living as we preach. And of course, I know that not only my kids that are 6, 12, and 14 have the ability to focus on what matters the most. And unfortunately, that goes for you too. Because of course, probably 95% of you are thinking, what did the guy do with his eye? Which is of course completely irrelevant because I'm here talking about Björn Borg. But it only shows that I also train a lot. And I hit my face when I was training and now I have a blue eye. It was a week ago, so you can imagine how it looked a week ago. So this looks good, actually. But I'm sure in a week, the memories will be the only thing that is lasting, and the blue marks are all gone. The last thing is having a clear mission. So why are we here? What is the reason of this? And for us, it's rooted in this strong belief that we want to inspire people to be more. Through our belief that sports can make your minds, your souls, and your body become something extra. And it just happens that the last probably 2 or 3 years, there's a lot of people around us that fuel this. We have Micke Dahlén from Handelshögskolan or Hansen who's talking about physical training as the key enabler to become better at also other stuff. And if you look at it, there's no other sports brand in the entire world that has taken this approach. They're all talking about competing, training to become the next world champion. That's not where the volume is. That's not where the potential is. The potential is to reach out to those that are not training at all. To make them understand that you shouldn't train to become better at training. You should train to become a better father, a better son, a better student, a better lawyer, to live longer, stay stronger, be smarter. That's where the potential is. So how's it going then? Well, if you ask me, too slow. But anyway, from 2014, we're continuing to grow every year. We are managing to uphold our profit, and also, of course, we're spending a fair amount into marketing. So we're on a good trend. So I think what this shows is that the idea of moving the brand from underwear to sports fashion is working. And that's, of course, we would want to have a steeper curve. But of course, also, if you're considering the last probably 3 years in terms of retail climate and consumer expenditures and exchange rate, then you can probably appreciate that this is probably a pretty good performance if you would benchmark that against any other. So we're super, super happy. Even, of course, we want the curve to be even steeper. But we're on a good run. All the numbers are slowly getting better versus last year. That also reflects Q3. So our latest quarter that we just released a couple of months ago shows that the sales is continuing to grow. We are being pressured on our profit, which is predominantly due to our currency. We are enjoying the hardship of a very weak Swedish kroner, which is tough, of course. When I started the journey, the US SEK was trading at 640. Today it's 954. So of course, from a brand that buys almost everything in US dollars and sell almost nothing in US dollars, that has a massive impact. But it's a bit like the rain, I can't do much about that, so I need to do what we need to do. And there's a number of things that we can do to mitigate that. In Q3 this year, we also have some impact of higher discounts, and that's within our control. And the reason for that is that we're closing down 2 warehouses because we were a consolidate and only have 1 warehouse supporting all our markets. That's going to be very, very efficient. So we're closing down 1 warehouse in Holland and 1 in Sweden, and then we're moving everything to a new warehouse in Sweden. And in order to not move too much stuff, we're clearing out the old things so we can move as little as possible. And that's also one explanation to a quite poor margin in Q3. But nevertheless, though, 9% profit margin, and we're growing almost 10% top line. So I think overall a good quarter in a very challenging environment. Looking at the brand then, we can conclude that when we're asking consumers, the branding is a very, very strong shape. So we ask 50 consumers in each of our markets every week in and week out, to see what do they think, what do they believe in. And one of the things we're asking is, how do you see us as a sports brand? And the question is a list of brands, and then we ask them, okay, which of these brands would you pick? And here in Sweden, we're number 3. So the only ones that is ahead of us in Sweden is Adidas and Nike, which is absolutely extraordinary. So we're ahead of Reebok, Lululemon, Under Armour, all those brands. The challenge, though, is that if we take out Borg from that list and then we ask them, hey, make a new list of sports brand, then almost no one will list us as a sports brand because the awareness still is too low, which means that no one is looking for Borg stuff. But when they see it, they want to buy it. That's our biggest opportunity and our biggest challenge. Secondly, of course, is to maintain our strong position as market leader in underwear, and we're doing that. So the transition from 14 until now has not impacted our position as the #1 underwear provider in Nordic and in Holland. We're still #1 ahead of Calvin Klein, which is fantastic. We need to maintain that. And last, of course, that's the measurement around the emotional connection to the brand. So we ask them then, how much do you like it? How much do you like what they're doing? And here we're #4 on a long list of different brands. So the brand is in good shape, and we can see evidence that this transition is actually working. And also, if we look back at Q3 and also this year, our apparel business, so the sports stuff that in 2014 we didn't do, is now growing year on year between 30 and 40%. Looking at our own e-com site, where there's no sort of filter, there's no buyer from Stadium who says yes or no, we can immediately put that garment in front of the consumers. We're growing our sports apparel with 77%. So we know that there is just an open position in the market for consumers that wants to buy something else than the 2 major global leaders in Nike and Adidas. That's fantastic. So what's the plan then? So what do we need to do in order to grasp this opportunity? Well, it can be summed up to 3 things to make it very simple. So 1, it's about doing a brand transition. So moving away from underwear into sports fashion. Secondly is to drive apparel. That's going to be the key lever of making this transition. So if you go down to any Satsum today, I'll promise you will definitely see a Björn Borg product. And most likely you will see a black t-shirt with a Borg print here, made of recycled polyester, one of our key styles, which actually shows that it's not that hard to make a product that will actually be spread across the market. So you can see that everywhere right now. We sold about 500,000 pieces since we launched it. We want to do more of those. And last, of course, we need to continue to attack sports distribution. So of course, we are very hard to find still. And of course, coming from sports distribution, we have the connections, but it's really the Stadium, the Anton Sport, the Paris, the Dhaka, all of those doors just need to grasp that we are the upcoming sports apparel brand. We also believe in city attack to limit our focus and to get our resources targeted to a smaller audience. So we're focusing on Stockholm, Helsinki, Copenhagen, Oslo, Berlin, Antwerp, Amsterdam, and London. That's really what we do all our focus when it comes to influencers, marketing, corporations, and collabs. I think that is super, super important just to narrow down our focus. And we have a good traction there as well. So an unproportionate share of our growth on e-com is coming from the big cities. We have a number of different categories, of course. And of course, you know all of them most likely. We believe that there's a massive opportunity in footwear, but also in women's underwear and of course in sports apparel. When we look at channels, We see that we have a super strong traction in e-tailers. So not only our own e-com site, but also Zalando and Sportamore and Amazon. We grow fantastically there. The opportunity, of course, is to get a bigger stake at the physical retail doors. When we look at our countries, we want to focus and really dig where we stand, where we're strong, which is Nordic and Holland. We have a strong position. Everybody knows the brand. And here's about extending that strong position into apparel. We want to grow our business in Germany and in UK because we think that that's going to be massive opportunities. And then midterm, we're slowly sort of, shaping up a plan to do a US attack. And just last week, we signed a global ambassador that will help us doing that, and we'll tell you more about that later on. We also believe, of course, that this journey is about two things. So you need to have the right people, because those are the ones who will make the difference. And on top of that, you need to take care of the planet. Those are sort of sitting together, and we call it people and planet. So I'm super proud over our sustainability work. Just 2 weeks ago, we were awarded number 4 on the Stockholm Stock Exchange. I was in a meeting with McKinsey last week in London, and we are leading that in terms of having personal sustainability targets, in terms of changing the entire collection to sustainable products, in terms of dropping air flights. So we're really doing fantastic here. And I think the opportunity we're having is that we're so small, so then it's easy to do changes quickly. I think that's super, super important. But of course, also creating this internal culture where you too can accomplish your own Wimbledon dream. So we allow each and every individual to become the best version of themselves. And again, here we have a number of internal symbols like compulsory sports hour. Like if you don't join, you get fired. And of course, that's very provocative. And yes, 2 years ago, it resulted in 415 million viewers. When I said that in a Dagens Industri ad, Bloomberg's, Harvard Business Review, everyone just came to Stockholm and wanted to interview me. How can you say that? And then we said it again. Because we really believe that we want to make you better, but becoming better is not easy. It's hard having your best day every day. But enabling you to add strong habits instead of adding bad habits is the key enabler to become better. And it's not about being 16 or being 80. All of us here needs to train 3 times a week, 45 to 50 minutes. And then your life will be better. So if you're already doing that, fantastic. If you train more, well, you can probably train a bit less actually. If you're not training at all, well, get that done then. That's going to be the biggest contributor to your life. We believe very strongly in that. Be Tomorrow is about launching our own logo that is really capturing the sustainability wave right now, and we're super happy of that as well. So just wrapping this up, 20 minutes flies by quickly, and the last minute I'll just spend on this slide here, in case it's not super clear already. So I made it clear for you just to help you out making the right investment. So I think we have a proven track record. Yes, we want to grow quicker, of course, but we've been growing steadily since we launched the new business plan in 2014. I think we have a convincing, easy to understand strategy. Sports is super, super big. There's always needs for new brands. It's not about competing and being number one. It's about inspiring people to train more. No one is really doing that. We have a stable and quite high dividend between 150 and 2 SEK. We also are keeping our ratios under control. We have a very strong and professional, committed management team that everyone is coming from the sporting goods industry. So we all have the phones to the stadium owners in our phone book. We can call all the owners. We know them personally. Of course, that will help us to get into the sports distribution. And of course, last, I think we now have a very strong platform to fuel further growth. I think one of the most impressive things that we did during this period was that in 1 year, we changed all of our systems. We had 17 when I started, into only 6. So we have one ERP system, one business system, one cash system. And we did that in a year, that was last year, where no one noticed it. There was no drop in EBIT, there was no lost numbers, there was no darkness, and that's never happened in the history of my before. I did it, SAP rolled it at Adidas, and we went completely black. So that was just done extremely well. So I have a super, super strong team, which indicates, of course, that stuff is done. Now we can focus all our efforts in winning consumers, inspiring people that, yes, you can too become better. And it's not that hard. You just need to train a bit more. And we want to lead that change that is going on across the entire Western Europe. So having said that, that's the 20 minutes on the minute. So thank you. Yes. Is this mine?
Yeah. I don't know.
It's only half.
Don't drink that.
I'm not a fussy guy.
Okay. Okay, thank you, Henrik, for a very opportunistic and inspiring presentation. And as you mentioned, Björn Borg, he was a really ambitious guy. And that leads me to wonder that previously you aimed at 1 billion SEK in revenues for this year with a 15% EBIT margin. You're now taking down that to 5% growth and a 10% EBIT margin. How do you see that? Because I think you have delivered on that the last couple of years. Couldn't you be a bit more ambitious here?
Yeah, absolutely. I think and I'm sure that probably everyone at one point probably joined a board meeting, and someone keeps telling me that when it comes to being a public CEO, if you want to survive yet another quarter, a good rule of thumb is to under-promise and over-deliver. Of course, that was not my approach until I became a public CEO. I always said, hey, aim high, reach high, and then you will reach further. And that's what I did when I started in 2014. And of course, I should have reached 1 billion this year. And many, of course, are looking at that as a failure. I think that we probably reached a lot further than if we didn't set the 1 billion. But then, of course, when we reviewed the business, we conclude that probably we should be more modest going forward, because otherwise it might not be taken seriously. So I think the communication right now is that we want to grow mid to high single digit, and we want to have a double-digit profit margin. It's probably relevant and realistic, which is catering more probably for the needs of my board members than me personally. So if you would ask me, I'm a guy that aims for world records. So I want to do a business plan that people write a book about. That's what I want to do. But knowing that if I continue to tell people that, then they might think that I'm completely insane. So we think that let's have relevant expectations, because of course we need to have a little bit of luck as well to accomplish great things.
Yeah, because it sounds that you have done very much good things here. So would you say that the initial plan for 1 billion was a bit too optimistic rather than something went wrong?
No, well, I think the outcome, what you do is a mix of so many different things. So of course, I remember when I started at Hestens in late 2002, the company did 170 million SEK and didn't do any profit. I met Jan Ryder, the owner, and he just gave me so much confidence and told me that you can do whatever you want. And 3 years later, we did 700 million turnover and we made 70 million profit. And he bought a private jet and Ferraris and all kinds of stuff. And I did that in 3 years. So of course, I know that if you are a bit lucky, if you have momentum, if you have a strong product, then you can do extraordinary things. And looking at 2014 leading up until today, well, I guess there's a lot of things, at least outside our control, that perhaps didn't work in our favor. And of course, if you just would take out the currency impact, so let's just pretend for a while, I do that sometimes, just to tap me on the shoulder, that the dollar would be today the same when I started. Well, the 71 million EBIT that you saw last year, that would have been 125 million EBIT. Everything else the same. That's the amount of impact. And of course, then I would have walked around on water, and you would have said I'm the greatest CEO ever. So of course, the billion, I think, was realistic and relevant, and I think it did its thing. We really, grabbed the whole organization towards one goal. I don't think it was, too far-fetched. But I can conclude that we will close 2019 in a couple of weeks. And of course, you saw the Q3. So of course, without giving any forecast, it needs to be an extraordinary good Q4 to do 1 billion and create the 15%. So I'll get back on that when we close the year. But of course, I have to admit that it doesn't look super promising to nail the 1 billion and the 15%.
But last weekend we had the Black Friday and also the Black Week.
Yep.
Can you tell us a bit more about that? How you saw your brand stand up there?
Yeah, well, I think it's a little bit two-folded. Of course, we can see that the increased share of volume that is coming out of discounted business is increasing. So that's one thing. So there's various campaigns all the time, and that's where really the volume takes place. I think what we want to do is take a slightly different approach. Of course, you need to be there because that's when the consumers are shopping. But we do believe, though, that there's other ways of capturing that shopping interest than only driving discounts. And that's, of course, what we need to sort of figure out. But we can clearly conclude that when it comes to off-price business, the billion could have been made already this year. However, of course, probably the margin would have been a bit lower because there's so many people that wants to tap into the brand, and it's still a premium brand, of course. So that easy route of reducing price, of course, is always there. I think what we want to do is building something long term, and I think remembering that the world don't need more products, but rather the world need a brand that really do something different. And I think, Apple or Tesla, there's a lot of brands that I think is really inspirational in that sense, that they took a slightly different approach, and I think we can do the same here. There's just no other sports brand that is taking the route saying, we don't care about those that are winning Olympic gold medals. We just don't care. We care about those that have other dreams. That's where the volume is. No one is talking to those people. Like the Josephine, 19-year-old in Örnsköldsvik, that's the girl. And I think we can change her life. Of course, together with our ambassadors and our influencers and all our symbols. But that's what we want to do. And if we do that, then of course the volume will just go crazy, of course. But more importantly, I think we will make a difference for real, which of course sounds a bit idealistic. So I admit that, but that's just the way I am.
And lastly, have you been able to grow I think you mentioned the recurring average retail price. Has that been growing for you the last couple of years?
Absolutely. So we had sell-through initially, and we changed that for 2019 because we felt that realized average retail price is a better way of measuring. So it's really about seeing, how much discount do you give away, and we're improving that. So if I look at our own retail stores, we're increasing that with 3% versus last year. So we can actually see an increase in our margin in e-com and retail despite the currency. So we are better at selling product at full price in 2019 versus 2018, which of course is not the trend if you then would look at Twilfit or MQ or a lot of other brands that is now really, really struggling, mostly retailers, of course. But so I think we see signs that there is possibility to really sell full price business. But then again, you need to focus on the inspirational part. So that's more than the product that you're buying, that you're getting when you're joining the Björn Borg family.
And by that, I would like to thank you, Henrik, for today's presentation.
Yes, thank you so much, guys.
Okay, then we would like to welcome Enlabs and CEO Robert Andersson together with CFO Adam Jonsson. Welcome.
Thank you very much. Thank you. And good afternoon, everyone. So let's get going. My name is Robert Andersson. I have been the CEO for the company now for close to 2 years. And during these 2 years, actually, Adam has been there as well. But yesterday, we also announced Adam as our new CFO. So I think a short introduction by you is in order.
Sure. Thank you, and thank you for the confidence in me as CFO. So I've been at Enlabs for about 2 years now, in the finance department mainly, and also head of investor relations. So very happy to take on this new responsibility. Before that, I was at PwC for about 3 years. So that's short about me.
Cool. So more about the company now. Let's talk about who we are, and for you who don't know us, I always open with this slide. We are a gaming company, predominantly iGaming, and our main brand is Optibet, which is the biggest brand in the Baltics. Baltics is our core focus markets. It has strong regulations and high barriers to entry, which we'll go into detail a bit later. The headquarters is in Riga. We have also a small office here in Stockholm, but also offices in Tallinn, Vilnius, and Malta and Marbella. We employ about 220 people. Half of these are offline, which means they work in our betting shops, etc. And then we have a focused brand portfolio. And I think what is quite unusual with the company our size is that we develop and own our own technology, which is a real strength. Moving on, we have 3 business verticals. One is our business to consumer gaming operations, which is the predominant amount of revenue where we have. We also have our media business. This is what is normally called affiliation business. There's many other companies that do that. In there, we have brands such as Best Casino, for example. And then we have our silver bullet going forward, which is our business to business solutions when we aim to package our new platform later on. Looking at our third quarter, we're really happy with our third quarter. We did 10 million euros revenue with a 3.1 million euro EBITDA, leading us to a 31% EBITDA margin. We had 94% sustainable revenues. With that, we do mean locally taxed in locally regulated markets, which is the Baltics in our case. If we look at media, which is the other decently sized business vertical we have, we did 3,500 NDCs, and that's an increase of 149%. So how do we get there? Well, clearly we have some key strengths, and as I said, we had the high barriers to entry for competitors. Baltics is also a very fast-growing market, even though we are actually growing faster than the market. Adam will talk a little bit more about that later. Diversified revenue model. We have, as I said, a peer-leading amount of already regulated and taxed revenue. We are debt-free, and we have a very strong cash position, which also Adam will talk more about. And one thing that I now feel really confident about into 2020 is that we are starting to get an organization in place. It has taken a while to do this change of the company and get it really focused on the customer and having the senior management in place to really be able to boost growth next year. And Adam is part of that change that we announced yesterday, but we have done a lot of other changes in the organization in Q4 as well that we feel really confident is that we are now geared up for 2020. So, and in 2020, we will, of course, go to our new platform more and more. We did go to optibet.com. We did move that to our new platform as of recent. And this is, of course, the platform that we will productify down the line and hopefully get third parties on. I think this will be ready for that in the mid of 2020 to get our first client on that. And then we will start seeing revenue also grow in our solution segment. So looking at regulations and social responsibility, there's a lot of companies, they kind of take this as a selling point, while it should actually be there as a basics. Compliance, looking at compliance, we as a company, first of all, Optibet was kind of conceived in a regulated market. So it's always lived in a licensed market. Not only are we licensed in Latvia, but also in Estonia and Lithuania. and in Malta, and in Sweden, and we are a listed company. So with that comes a super big set of compliance that we have to adhere to. I'm not gonna read all these bullet points to you. You can download this presentation later if you want to study it in more detail. Social responsibility. We predominantly work with giving back to the sport community in the sense that we sponsor a lot of different leagues, a lot of different teams. We've also taken from now on, or a few months back, that if we sponsor the male team, we also aim to sponsor the female team, and sometimes we sponsor the female team and not the male team. It just simply depends on what sponsorships are available, but as a large extent as possible, try and make it as equal as possible. And of course, this is a good way for us to also be seen in conjunction with sports. So of course, it's an advertisement opportunity as well. Looking at responsible gaming, this is so self-evident that it has to be there for us, and it's built into everything we do. And considering that our platform is compliant in so many different jurisdictions, it has so many tools built into it. A lot of other companies, they give this package, you know, a name. I don't want to mention names, but they try and sell it as a product. But this is something that has to be there if you're going to be a serious player. So of course we have deposit daily limit, bet daily limit, loss daily, spend time, all of this that you really need to have to be able to work with responsible gaming. Also something that comes natural to us. Then we talk a little bit about our home market, Estonia, Latvia, and Lithuania. And in Estonia, we are number 2. We are gunning for that number 1 position. There's only one player that is bigger than us. In Latvia, we are the biggest one. We actually enjoy over a 50% market share there, so you could almost call us Svenska Spel there, which is really, really good. Gaming tax is 10%. In Estonia, gaming tax is 5%. And in Lithuania, I don't know if it's a big feat, but we have gone from 6 out of 6 to now number 5th. So we are clearly growing, and Lithuania is a really growth market for us going forward, and in 2020 we see a great opportunity there. All in all, these markets are about 1 billion euros in value, so there's still a lot to grow into there. And then we actually can look in more detail here. I know it's really hard to say. Again, if you need to, download the presentation. You can study this carefully. But they are hard to get into these markets. So if you look at Latvia, for example, there's only 9 licenses there. And you need to have 1.4 million euros in share capital. And then it costs an additional 200,000 euros to just apply for the license. And then it's forbidden to market. So once you're in, once you've paid all of this, it's forbidden to market your service. So we have a strong first mover advantage there. Our brand is known since 2008 there. So it's not like Sweden where it's all over TV, etc. You are only allowed to market these type of services where you sell this service. So that would be you can market your own website on your own website, kind of thing, which doesn't make much sense. If you look at Lithuania, there's another set of rules. You need to have 20 betting shops physical before you can apply for an online license. This is partly because they want to protect the jobs on the ground, so you don't run a remote gaming service and doesn't really stimulate to the work availabilities in the nation. You still need a lot of share capital. License fee is just 479 euros for some reason. They could easily have added a few zeros and nobody would have thought about that. And then you have Estonia, also 1 million euros. But there, the legislation about advertisement is more liberal, more like Sweden in that sense. And then, if you want, you can download this and study all of the differences in the markets. But we do have one new market now. We recently announced that we completed our transaction in Belarus. We have bought land-based operations there because it has the same prerequisite as in Lithuania. You need to have land-based operations to apply for an online license. And once in, you have to pay fees. Of course, there's 1 million that you need to deposit. But what you get is a market that is more population than the Baltics altogether. And we say that this will drive our growth. The online penetration is fairly low. and it's growing really quickly. And what's really good here is that if you look at the unlicensed competitors we then have there at the moment, because everything is unlicensed there at the moment, all of them are only offering their services in Russian. And we have a Russian is a common denominator in all our markets. So we have the infrastructure already. We have our site in Russian, and you have 25% Russian speaking in Estonia. It's about 50-50 in Latvia, and it's about 10% in Lithuania. So we do have all of that set up. So we feel quite confident that this is a market which we can address quite effectively without taking too much cost, so we can really scale into this market. And then, of course, looking at markets of interest, I'll start with Finland because that is the actual market of interest. With Optibet.com, we did the transition from our old platform to our new platform, made it a lot stronger in terms of its product offering, and we will still keep doing improvements. But in 2020, we are going to go after Finland as a market. It's a very interesting market in the sense that you'd classify it as grey, but it's a big market to go after. And I think some of our competitors, for them, they are their absolute biggest market. And we have a good opportunity there, since in Optibet.com, most of our clients are already Finns, actually. So we can just expand on that. In Sweden, well, you all know it's quite up and down here in Sweden with legislations and what to be and not to be. So we have a license here in Sweden. We took that. We wanted to always be prepared. We feel that this can be an opportunity in terms of M&A for us, also for our platform, but also to enter organically. But we still want to see how this market pans out before we actively do any moves into Sweden. And just rounding off before I give over to Adam to do all the details with the financials, if we look at our 3 business verticals in a bit of a more detail, the gaming one is really the locomotive that drives this company. It's the big part of our revenue. And in Q3, what we did is that we reaped the benefits of all those aggressive product rollouts that we did in the end of Q2. We really saw that made a difference. And betting actually performed better than we expected, considering that there were no World Championships during Q3. So July and August are a relatively slow month when it comes to betting. And talking about media, this is I'm happy to say that we have a good trend in the NDC, which is the new depositing clients. 75% of these are on rev share. Adam will explain more in detail of what that means later on. The NDCs are growing as good as I'd say that I'm happy with. The revenue tail is a little bit slower than I would hope. That's it. But I can clearly see that we are turning the trend of media. It's just a little bit slower than I want it to be. But then again, I'm also an impatient man. And then again, the last thing for me here, before I hand over to Adam, is our solutions. People are asking, why are you even reporting solution as a separate business area? Because it's just one service. Well, it is Score24. It's a good service, but for us, what is the real thing here coming up is that when we feel at the stage where we have our new platform ready to be productified for third party, and we are already having dialogues with a few potential customers, but we also really want to ensure that once we say yes to someone, we are ready to deliver on our promises, because otherwise there's no point. But we believe that we will start filling this vertical in our business with some exciting content in 2020. Adam, financials?
Thank you very much. Yeah, so we're already quite far into Q4, but let's take a little bit of a recap of our third quarter. So we'll start with Enlabs consolidated figures. And as Robert mentioned, we hit 2 financial milestones, which we're proud of this quarter. It's 10 million euros in revenue and 3 million euros in EBITDA. That was reached by organic growth by 7% quarter over quarter and 32% year over year. In the quarter, we had no adjusted transactions, so our EBITDA is the same as adjusted here, which grew by 8% quarter over quarter and 27% year over year, resulting in a 31% EBITDA margin. That makes us a member of that kind of a rare club of companies called 30-30, companies who grow more than 30% annually with a 30% margin. And this slide, we like to highlight how we transition from, on the left side, on how we transition from EBITDA margin to net profit margin. Only have 5 percentage points between these two KPIs, which is attributed to our amortization charge. We are completely debt-free, and in our two main markets, we have a kind of favored corporate taxation, which is paid up on dividend and not on financial result, which makes us keep this high net profit margin. On the right side, you have our EPS dynamics over time, and in Q3, we hit our highest EPS so far, with 7% growth quarter-over-quarter and 39% year-over-year. If you look at the 9-month period so far, 2019, we reached 45% growth, which is above our financial target of at least 40% EPS growth annually. This slide, we like to demonstrate our solid cash conversion. So on the left side, we compare EBITDA to operating cash flow, and on the right side, we have net profit to free cash flow. Starting on EBITDA to operating cash flow, we convert in Q3, we convert 80% of that into operating cash flow. This is a KPI we aim to get to as close as 100% as possible. Although in Q3 we have a few one-offs. We had a fine from the UKGC, which was expensed in Q2 and paid in Q3. We also engaged in some bigger sponsorship, which was prepaid during this period. So if you look at the 9-month period instead, we get to 94% of EBITDA going to operating cash flow. On the right-hand side, net profit to free cash flow, so how much of our net results ends up in our bank account. We have in the third quarter 66% with the same one-offs as recently said, and for the 9-month period we have 80%. So to sum this up, we're really happy that we have our financial results backed up by cash flow. Try to quickly guide us through our cost components, which are expressed as percentage of revenue, and EBITDA remains as the resulting factor. So in Q3, we managed to keep our high profitability at 31% EBITDA margin and had really two bigger changes from Q2, which is our marketing that grew by 1.4 percentage points, which is attributed to our Lithuanian business, which we kind of put the gas pedal down a little bit in marketing and have our name out there. At the same time, we scaled our personnel costs, so they decreased by 1.7 percentage points. If we sum up personnel cost and other costs, which are fixed cost, that base goes up to 25%. Might seem like a quite big fixed cost base for an online company as we are, but it also shows the scalability here. We don't expect that to grow, and as we grow revenues, that will decrease as percentage of revenue. As Robert also mentioned, we have 94% sustainable revenues, which is locally taxed. So in Q3, we have 9% average gaming tax. Looking a little bit closer into each business area, we have gaming, which continue to show solid momentum. We have 6% organic growth quarter-over-quarter and 39% year-over-year. Our EBITDA grew by 7% quarter-over-quarter and 48% year-over-year, resulting in a 32% EBITDA margin. Again, 94% sustainable revenue shown by the green bar over there, and as you can see over time, it's never gone under 90%, so we have a really solid experience from these regulated markets. During the quarter, our casino and poker were the products that really fueled the growth here, with casino, with our improved mobile offering during the summer months. Also, our launch of Evolution Gaming in Estonia. On the poker side, it was our launches in Latvia and Estonia during the second quarter that fueled the growth in the third quarter. As Robert mentioned, our sportsbook, we're really happy about the performance. It was kind of flat compared to Q2, but considering July and August was really slow, we're happy with that one. If we look at the Baltic markets combined for the 9 months of 2019, they grow by 33%. We grow by 39%. So even though we're the biggest operator in the region, we keep growing faster than the market. We keep increasing our market share here. Quickly, a little bit of the underlying KPIs in gaming. On the right side, we have active customers and deposits. In our case, an active customer is a depositing customer due to local regulation. I think that's important to highlight here. Active customers declined by 1% quarter-over-quarter and grew 5% year-over-year. If you sub-segment that into the Baltics and rest of the world, we grew 13% in the Baltics and decreased 48% the rest of the world. That's due to the fact that we changed Best Casino from being a casino site to being a media site. So we lost a lot of active customers, but not really showed in the NGR. Our deposits, though, increased 7% quarter-over-quarter and 43% year-over-year. On the left side, we have average monthly revenue per customer, reached an all-time high 81 euros, up 32% year-over-year. We see this as a result of our increased marketing efforts and our improved product offering and services, which creates loyalty of our customers. Quick look at media. The turnaround continues. We're happy to still continue to see quarter-over-quarter growth by 14%. Low 6% EBITDA margin. We keep investing a lot here to make this turnaround. As mentioned, our NDC grew by 9% quarter-over-quarter and 149% year-over-year. And 75% of these are on what's called a rev share deal. So the revenues are long-term, they're sustainable, but they're also lag behind from the number of inflowing new customers. Then a quick look at our solutions. It's only 3% of group revenue right now. Stable business segment, 3% decrease on top line, 2% increase in EBITDA. 41% EBITDA margin, so very profitable business area. But as Robert mentioned, it's the future in here with our platform as a service, which is the opportunity. So to round off these financial slides, we take a look at the balance sheet as of end of Q3. 38% of our assets is our cash, 16.6 million euros. About half of our assets is intangible assets, consisting of our brands and domains, gaming platform, gaming licenses, player databases, goodwill. On the other side, we have no interest-bearing liability, so completely debt-free at 85% equity ratio. So we believe we have a really solid financial position with a strong cash and no interest-bearing liabilities. So good. Thanks for that, and over to you.
I'll round this off really quick. I see that you're stressed.
Yeah.
Financial goals, they're very easy to remember. In 2020, we will hit 20 million euros EBITDA. That in combination of organic growth and acquisitions, of course. So how will we succeed? Well, of course, we drive growth of current products, new products into new markets, and we are actively going to partake in the consolidation, which is, of course, M&A. And we take great pride in being a little bit cautious here because, of course, we have to safeguard our shareholders' money. So we make sure we do good investments. At Enlabs, we also believe we are an entertainment company. So with that said, we decided that we wanted to present our Q3 and sum up our Q3 in a bit of a different way. Some of you have seen this already. I will try and, or maybe I don't know how PC works. There it goes. We did a little bit of a film that hopefully sums up this half an hour long presentation.
Record has been broken. Welcome, world, to another uplifting interim report from Enlabs, the gaming company infusing joy and sparking change in the Baltics and beyond. This quarter has been our best one yet, and in short, it looked like this, sounded like this, and for our shareholders, it worked like this. You want numbers? Well, how about this number? Or this number? Or this number? Here at Enlabs, we like our numbers like we like our coffee. Strong, black, organic, and sustainable. In fact, our sustainable revenue is the highest in the business. Our organic growth is blooming. And just look at this EBITDA margin. But not all graphs point upwards. Our staff turnover has decreased dramatically, and we have absolute zero debt. Wait. That's good news! In other good news, Q3 was so strong we smashed our revenue milestone. And thanks to our strong cash conversion and cost control, most of that money will end up in the bank, giving us a solid cash position for future investments. But let's slow down for a second. What do you even know about the Baltic gaming market? Well, for starters, it's got some high barriers to entry, partly due to heavy regulations. The good thing for us, we're already in. Not only are we in, we're number 1 in the region, aiming for first in all 3 markets respectively. After launching Lithuania late last year, we've quickly moved up the local ladder to 5th place thanks to strategic marketing investments. Partnering up with the Lithuanian Football Association, we've gotten more media exposure than any competitor and are proud to see a 50% revenue growth quarter-on-quarter. In Estonia, we're closing in on that number 1 spot that's been our goal from the get-go, and in Latvia, we're already up there, with new content being a key driver going forward and a complementary brand soon to be launched. So what's next? Well, it's fair to say we're in for a period of growth. Our main brand OptiBet is up and running on its new Maltese license, opening up for exciting opportunities in the markets far beyond the Baltics. On the technical side of things, we're proud to be operating on our own platform and excited at the prospect of licensing it to third parties in the future. We see great potential in Belarus, having signed an LOI for acquiring a smaller operator in the market, which opens up for future online licenses. But more on that as the story unfolds. Our strong cash position opens up for further acquisitions, and we will invest wisely and when the time is right. 2020 will certainly be a very exciting year for us here at Enlabs, and our goal is to maintain our high EBITDA margins, strong organic growth, and increase EPS. That and so much more, so stay tuned for more breaking news from Enlabs. And now, let's play.
That was it.
Thank you, Robert and Adam. Unfortunately, we're running out of time, so
sorry about that.
Any time for the Q&A, but I'm sure that you will stay here some minutes after the presentation if anyone of you have questions to them outside.
Surely.
Absolutely.
Thank you.
Thank you.
Thank you.
we're running a bit behind schedule, so I'll be quick. My name is Oskar Wikström, and I work as an analyst here at ABG. And this afternoon, we're joined by Björn Janström, interim CEO of Ferroamp. And I'm just going to let you get to it right away, since we're a bit behind schedule. Thank you.
All right. Thank you very much. And I'm really happy to be here and see so many people here today. So for those of you who are not aware of Ferroamp since before, this is just a short recap on what we actually do. So Ferroamp is building and selling a hardware and a software platform for managing renewable energy from solar cells, energy storage, and electric vehicles. And in order to do so, we have the hardware platform. This is the energy hub in the top middle there. It's energy storage in the far right. It's our solar string converter, and it's a converter to connect batteries. These are different power electronic devices with software in order to interconnect all this in an efficient system. To go with that is a software platform, and here users can log on, they can monitor their production, consumption, storage, electric vehicle charging, and also control it. So these are very important topics in managing the energy in the future energy ecosystem. And to summarize what this is all about and what is unique about Ferroamp, we could say that this is about that transport of electricity is quite expensive today. And just as a comparison, last year, the total turnover on the energy market, the Nord Pool Stock Exchange or Nord Pool Energy Exchange, was 50 billion Swedish crowns. Whereas the, sorry, that was actually the, that was 40 billion crowns. So, okay, so I'll restart here. So, the turnover was 40 billion crowns, whereas the sum of all the tariffs that customers pay to get this electricity to their home was 50 billion crowns. So, in other words, it's more expensive to transport electricity than it is to buy it. And the logical conclusion here is that, well, you shouldn't transport electricity. You should produce it locally, you should store it locally, and use it locally whenever this is possible. So, this is essentially what Ferroamp is about. And another way to see this is that this is also something which is now been noticed by our politicians. I don't know if any one of you were following the debate a couple of weeks ago, where some of the party leaders were actually educating themselves about the difference between energy and power. Because this is what it is about. This is what makes transport of electricity expensive. This is that you need a high power level. It's not really how much energy you need, it's when you need it and how much you need exactly when you need it. That is the difference between power and energy. So the energy transition isn't so much about energy as it is about power. And this is now also being notified by the politicians. And one example of something good that actually is coming out from the political side is that the European Energy Commission is now mandating member states to allow for what they call local energy communities. And this is something which has to be implemented in national regulation by 2021. We also had a new, the Swedish government made a new proposal for a change in the legislation that would allow for one way of sharing energy so that neighbors can share energy. They can invest in one common solar installation, and then they can share the energy among their different buildings. So this legislation is something that will really open up for one of our technologies, which we call Power Share, which enables resource sharing among a small community. So things are happening on the political side. That being said, I mean, sometimes when you hear about the climate debate and climate change, and you listen to Greta and Trump is backing off from the Paris Agreement, you tend to get a bit disappointed and think that things are going quite slow. But actually, the energy transition is happening a lot faster than many of us think. So there is light in the end of the tunnel, and there is some positive news. So I just wanted to share that with you to say that there are actually things happening. And one of these things, this is a recent tender, what is called a power purchase agreement that was closed in Dubai just a couple of weeks ago. And the winning bid there was $0.0169 per kilowatt hour. So that's about, in Sweden, that's about 16 öre per kilowatt hour. So this is a tremendously low electricity price from solar energy. And this is today. And even if we were to apply this to Sweden, well, then we would end up at maybe 30 or 40 euro per kilowatt hour because we don't have as much sun as Dubai, but it's still a very, very good price. So, and this transition now, this is not driven by political means. This is purely economical reasons for doing these investments. So you don't need any incentives or something to do this. This is just plain business logic. Another example of things which are actually going a bit faster than one may think is electric vehicles. This is just a snapshot of some of the vehicles that will be launched on the market next year. So you have the new Tesla, you have Volvo's Polestar, you have the new Volkswagen ID.3, and there's a bunch of other modules. So in terms of electric vehicles, we have already reached a tipping point where electric vehicles will be more attractive, more efficient, and lower cost than conventional combustion engine cars. Now, this is another thing that will cause a big impact on the local grid, because if you're going to charge all these vehicles, the cables in the ground, the transmission lines, the distribution grids will not be strong enough to do that. And that is why you need something that can manage power. And this is, again, what we're working with. We use, for example, batteries to enable faster charging of electric vehicles. Another highlight, another positive idea, this is maybe not a market trend, but this is something we're quite proud of. Riksbyggen, which is a large Swedish housing company, they just received the Environmental Building Award for 2019 for the new apartment complex this is a bostadsrättsförening, a housing association, with about 100 apartments. As you can see, they have solar panels on the roof. They have second life bus batteries from an electric bus line in the basement. And all of this is built using our DC infrastructure. So it's our power electronics and our control software that is integrated in this building to enable this. Yeah, we're doing quite good. So this is the sales for the last 4 years. So when you see, we have this is 12-month periods from October to December. So the last quarters ending in September, we had an invoicing of 34 million crowns. So we are growing quite rapidly, and this is driven by the fact that we are actually operating on multiple markets, that all of them individually are growing. So it's the solar market, it's the energy storage market, and it's the electric vehicle and EV charging infrastructure market. And all of these, we are essentially integrating them into one platform. If you look at the last quarterly report, that includes the first 3 quarters this year, the invoicing was 27 million crowns. And the result and cash flow maybe wasn't that happy, but that is partly because we had one-time costs related to our stock market introduction, and also the fact that we are growing, so we are tying up more capital in our warehouse and in trade receivables. On the organization side, we are now expanding, so we're strengthening our organization and management team in order to manage the scale up that we have in front of us. So we just recruited a new CFO. We also have a new VP Sales and Marketing, Niklas. And we also have a new CEO coming online shortly, hopefully. So that's a recruitment that is ongoing. We have also increased our delivery capability because we have been suffering a bit, because we have actually been forced to turn down orders because we have quite long lead times today. So we're managing that by more outsourcing, finding new suppliers, and also hiring of personnel for assembly and testing. And we also strengthen our development team so that we can continue to improve our products. And talking about our products, so these are 2 of the different energy storages that we offer. So the left one here is manufactured by Sunwoda, but it's with our design and with our power electronics and software inside. The right one is from a Swedish company called Nilar, that is primarily dedicated for villas and private households. And we sell this as a packaged solution with our Energy Hub system, so it comes bundled with the electronics and the software so that you integrate this efficiently in your house. And then you can use this to charge your electric car faster. You can use it to reduce the grid fee that you pay to the grid company. And we have had quite strong sales. We launched this product just before summer, and we have sold about 130 systems until Q3. So that has been quite a rapid growth. Another product that we're manufacturing is this. It's a solar string optimizer. It's a bit technical, but it's the device that allows you to connect solar panels to our system. And this is one of the first products that we are outsourcing completely. So we have recently signed an agreement with 3 Engineering, which is Hong Kong based, but manufacturing in Guangzhou in China. And this will drastically improve our delivery capability because of their large manufacturing capacity. First delivery of this new version of the product will be next quarter in 2020. And we have also made some improvements so this can handle the new high power panels that will be introduced to the market in the coming years. And we have also managed to reach a quite remarkable 99.5% efficiency. And this is something which is inherent in the way that we build our technology. I will come back to that later, what's the core of our technology. But this is something that no one else can do with conventional AC coupled systems. So really, really high efficiency. Here's another example from one of our customer projects. This is a mobile charging station. As I mentioned, the problem with the future electricity system is not that there is a deficit of energy, it's that you don't have power, you don't have the energy when you need it. So this is a mobile station, so you can come up with cars around this, and then you have fast chargers on the side. So this container is filled with batteries, so it's charging slowly from the grid, whatever grid capacity you have. And then when cars come up, and they can charge with 50 kilowatts each. So if you have 4 cars, it's 200 kilowatts. And that is no problem to handle even with a small grid connection, because we're using the batteries inside this as a buffer. So really interesting application of our products. So, and then about the technology. So we're going a bit more technical now. And the system that we have built is DC based. So you know that there's 2 ways of transporting electricity. It's AC current and it's DC current. And we have focused on the fact that solar panels are delivering DC, batteries are delivering DC, and electric vehicles are also running on DC. So that is why we see that the most efficient way of doing this is to integrate everything on a DC grid. So our product here is what we call the energy hub, and that is acting like a bridge between the normal AC grid on one side and then the local DC grid on the other side. And this is where we connect as much as possible. So then we can store locally, we can produce locally, and we use energy locally. As I mentioned, that we try to do is locally as much as possible in order to avoid the expensive grid costs. You know that in Sweden now, you don't need to open that many newspapers before you see that one of the big grid companies like Vattenfall, they're raising 10%. And then 1 week later, E.ON is coming and they are raising their tariffs by 10%. So the benefits here is that we only use one inverter. Our competitors, they have one inverter for the solar cells, one for the batteries, one for the car. So we only need to use one. And we also reduced conversion losses, because here we essentially have much lower losses when we're transferring energy on the DC side, on the red lines here. And the system is also future-proof, so it's quite easy to expand this with more solar cells, more batteries as your need grows. And to tell something more about DC systems, so I would say that today we are actually a world leader when it comes to direct current or DC installations. We have more than 1,000 systems in service today, and this is as far as we know, no one else has this large amount of real commercial systems in operation. This is also the natural way to integrate electric vehicles, solar panels, energy storage, as I mentioned, because they all run on DC from start. So why convert them to AC? Also mentioned lower conversion losses. And this is actually something that gives you a CO2 reduction already before we commission the system. So one example here, on the right-hand side, you see a market-leading solar inverter. You're using that to connect solar panels to your home. But this is a conventional AC coupled device, so it generates alternating current. The black box there, that is our corresponding part for connecting to a DC grid. The market leader is weighing 20 kilograms. We are weighing 4 kilograms. So, and they have the same power rating. The only difference is AC versus DC. So we're using much less aluminum, much less copper, much less plastic, and this is something that gives you a CO2 reduction already before you start to operate your solar panels, because we need less raw materials. And the same thing actually goes with the cables in the ground. We use a fairly high voltage, 760 volts, and this is something that allows us to reduce the amount of aluminum. So in a cable, we can reduce the amount of aluminum or copper by 50% because we are using this DC technology. And that also gives you a CO2 saving. All right, so to conclude this, the plan ahead here now is that we will continue our efforts with industrialization and what we call Generation 2.0. And this is where we are adapting our products not just to build 100 or 1,000, but to build 10,000 and 100,000s. And we will do this by increasing delivery capacity, by, for example, outsourcing. This will also give us margin improvements because it's something completely different to design the products for manufacturing 100 or 1,000 pieces and designing them for manufacturing hundreds of thousands of pieces. We are also focusing quite heavily on our service offering because another unique aspect of the systems that we have is that we generate a lot of data. I think that we actually have more data than some of the big grid companies today because of the high resolution of data acquisition that we have in our systems, and all of them with real-time access. And this platform, this amount of data, is actually a very good platform to provide energy services. And this is something that we are now developing so that we will be able to capture a new revenue stream. Apart from just selling the products, we could also get a revenue stream from the products while they are in operation. We are also working on supplementary products, particularly related to electric vehicle charging, so we can integrate electric vehicles even more into our system, and also in the future pure off-grid capability, so that we can build independent islands where we can provide electricity. And of course, market expansion. Today, we have barely managed to cope up with the Swedish market. We have a few installations in Norway, but we're now also looking to address export markets outside the Nordic countries. So that was Ferroamp in 10 minutes or so.
All right, thank you.
Thank you.
So yeah, we have time for some questions as well. I think just one first question was, this module and this technology that you have, is that patented? Do you own the rights for this type of technology, or? Yeah, we do have a few patents. One of the strongest one is related to something that we call phase balancing. This is a technology that allows you to reduce the size of your grid fee, and hence you reduce the grid cost. So, for example, a private villa in Sweden, in most cases you can reduce your fuse size by 1 or 2 steps, and that allows you to save between 2,000 and 4,000 crowns per year. For larger facilities, the saving is bigger. So there we have a strong patent. We also have one pending patent when it comes to our power share technology. Okay, thank you. And one thing that was really interesting was this: the EU encouraging these sort of micro economies or sharing economies. Could you just talk on the other side of that? You mentioned, the power grid companies; they're real big, powerful. Do you get any pushback from them, or I guess another thing could be that you're avoiding taxes effectively, maybe if you. So could you comment a bit on that, if there's a pushback?
Yeah, that's a very good question. There is both pushback and because essentially what we're doing when we're doing these power share installations, and also to be fair, it's so far it's just a quite small number. We have maybe 20 of these in operation today, but some grid companies are seeing this as a threat, and some of them are quite embracing and see that this is a new technology. This is the way that the world is going, and I understand this response because essentially we are competing with their monopoly. So I think that's just natural. But yeah, so we have had mixed reactions from Swedish grid companies. But I think that given the fact that the European Union is pushing for this, and the fact that the Swedish government also has seen that there is a big possibility in allowing these types of local grids. So I think that the legislation will move in that direction to allow it.
Understood. And one other thing that I was a bit curious about is that you mentioned, so you've mentioned other markets, so outside of Sweden, for example, but what are the main applications? Now, you showed a few, for example, residential housing and so forth. I mean, I guess you could adapt this to pretty much anything that is electric.
Yeah.
Are you looking into entering new channels of usage, for example, more industrial customers and so forth, or how do you view?
Yeah, so I mean that's one of the beauties with our technology is that being a small company, we were struggling with how do we address the needs of everyone from the small household, from the villa to the school or the hospital, and the way we were able to meet these demands was actually to modularize the system. So this is also one of the unique things that we have based our product offering on standardized modules, and that means that we can cover a power range from the small villa at, let's say, 5 to 10 kilowatts up to a semi-large commercial building with maybe 300 kilowatts. And we used this using exactly the same modules. The only difference is how many modules we use. In the villa, we use 1 or 2 modules. In the commercial installation, we use 50 modules. And then we configure the software differently. But this is the way that we can span all of these.
Yeah, all right.
But so far, the sweet spot has been commercial installations, actually.
Understood. And another thing was in terms of profitability. So you're not earning money at this point.
No.
And I'm just thinking, you're talking about this industrialization and generation 2.0 and so forth. That time frame there, what do you think would be like a sustainable level of EBIT margin over time, let's say, or gross margin? What do you see? Where do you see the potential here?
I think that it depends a bit on what we're talking about. If we talk about just purely the product sales, the hardware sales, we think that a reasonable margin going forward would be somewhere around 30%. On the other hand, on the services segment, we have the possibility of getting a much higher margin. We definitely see a great possibility to capitalize on the already delivered base and the products that we will deliver in the future. So that's why we're focusing quite a lot on the services segment as well.
Understood. And also you mentioned that you're looking to get new suppliers in as well. What's the market there? Like how many suppliers are out there that could potentially facilitate you in this growth journey and getting your volumes up? Is there a lot of different?
Yeah, there are. There's a lot of suppliers. So I think the challenge is to find the right one, because you need to find one that has the right competence and has the right mindset and sort of can follow us on the journey and can help us to push the prices down. And in order to do so, it's very good or important to have a supplier that has a deep knowledge on this type of market and where you get the components and so on.
And you also mentioned that you had some issues with delivery times, that they've been quite long, and you're working to get that down, and you gave some examples. I'm just thinking, is that a lot of work like internal with Ferroamp, or is it more dealing with your suppliers, and what has been the bottleneck, let's say?
It's both, actually. So we have worked a lot internally in improving and structuring our ways of work, hiring new people, automating processes, automating testing, and also working with our suppliers to help them increase their capacity. So it's been both internal and external work in order to come where we are today.
Understood. That was about all I had. So I will like to thank you so much for coming. Very interesting stuff, and thank you everyone else.
Thank you.
Thanks,
Då sätter vi igång. Varmt välkomna hit. Staffan Bülow heter jag och är analytiker på ABG där jag täcker bygg- och fastighetssektorn. Nu ska vi få lyssna på det första fastighetsbolaget som presenterar på Introduce Investor Days och det är med Catena som är det största logistikbolaget i Sverige. Så jag välkomnar dig upp till scen här, Benny.
Tack för det. Hör ni mig där bak också? Tummen upp, ja, underbart. Benny Thögersen, vd Catena. När jag introducerar mig själv så brukar jag säga att jag är mycket mer logistiker än vad jag är fastighetsmänniska. Och det är spännande att komma in i en ny bransch och liksom se saker och ting med lite andra ögon. Och det är väl också anledningen till att jag har landat på Catena. Slidesen är på engelska, det går bra att prata svenska hoppas jag. Och vi kör. Snabbt, kvickt vilka är Catena. Vi tittar snabbt på Q3, resultatbalans och så går vi in på det som är vår verksamhet och avslutar lite med framtid och lite case. Catena, precis som i introduktionen, vi är Sveriges största fastighetsbolag som enkom då fokuserar på logistik. Det är viktigt för oss. Vi har en portfölj som vi har i den gyllene logistiktriangeln och det som är lite intressant också tycker jag är att vi har huvudkontoret här, inte här uppe som många andra börsbolag har, framförallt fastighetsvärden. Och jag tycker det är rätt häftigt att vara här därför att snart kommer det komma en förbindelse, Fehmarn Bält, för er som känner till det, den ska vara klar 2028. Och det innebär, tror jag, att mycket av logistiken kommer att förskjutas söderut och då är det ett alldeles utmärkt ställe att ha sitt huvudkontor på. Kommer att nå. Idag har vi 4,2 miljoner människor som bor i Stockholm-Mälardal-området. Det har vi också i det här området söderöver. Men når vi Hamburg, når vi Frankfurt så når vi 50 miljoner människor där uppifrån. Bara en litet steg åt sidan. Vi är ett kassaflödesdrivet företag. Vi är väldigt duktiga på det med stabil verksamhet över tid. Och aktien handlas på Nasdaq Midcap. 1,8 miljoner kvadratmeter logistikytor har vi runt omkring i Sverige. Värde på det på knappt 16 miljarder. En uthyrningsgrad på 96%. Jag brukar också säga att vi är en liten min maskin. Vi är 44 medarbetare som hanterar det här stora. 440 hyreskontrakt, 14 500 aktieägare och 10 olika typer av finansiärer. Det blir rätt stort värde per anställd och rätt stor omsättning per anställd som vi hanterar. Där. Vi är väldigt nöjda med vårt resultat som vi levererar i Q3 och detta gör vi när det börjar bli lite turbulent i omvärlden. Vi har en projektportfölj som är rekordstor som jag kommer att visa er senare. Och det är också så att just logistikfastighetsbranschen har blivit väldigt het bland investerare. Och vi rider lite på två trender. Den ena är megatrenden som handlar om globalisering, urbanisering, digitalisering. Catena är en del av svensk handels ekosystem. Och den andra grejen är att kapitalet söker avkastning och då har Sverige och logistikmarknaden blivit attraktivt. Framtida växt, jag säger att vi har projekt som kommer att bli färdigställda för ett värde om runt 900 miljoner där allting i princip är redan uthyrt. Vi har en landbank och detta är väldigt viktigt att ha med sig också som är på efter senaste förvärvet, det är sedan en vecka tillbaka så har vi 3,8 miljoner kvadratmeter på strategiska logistikpositioner runt om i Sverige. Vi fokuserar på positioner, logistikpositioner för att skapa värde. Vi vill gärna ha stora sammanhängande markytor där vi kan göra mycket på samma plats för att få dit kompletterande verksamhet. Tänker man på handel, e-handel, då vill man ha både en terminal och sitt lager ganska nära eller direkt intill varandra för att kunna få effekter, kortare ledtider och lägre kostnader. Men också punkten där man faktiskt distribuerar ut varorna från. Det är viktigt med OPEX och CAPEX för att få till det helt enkelt. Ja, vi tittar löpande på förvärv också, men vi väljer noga vilka fastigheter vi vill förvärva. Tittar man på Q3 utgången, det som jag fokuserar på allra mest i vår verksamhet, det är vårt förvaltningsresultat. Vi behåller 478 miljoner kronor på en intäkt på 885 miljoner kronor. Och det är extremt bra kassaflöde. Det innebär att vi har 54% av varje intjänad krona stannar kvar i bolaget. Det är rätt tacksamt. Jag kommer att visa med lite tillväxtsiffror sen också. Balansen, där tycker jag då det är intressantaste, det är egentligen värdet på våra fastigheter som är knappt 16 miljarder. Och också stabil tillväxt över tid på den sidan. Kassaflödet har jag pratat om, 54% över på förvaltningsresultatet och det är vi grymt stolta över. Och det är den här maskinen som jag pratar om. Vi är få människor som hanterar stora värden och är väldigt effektiva i vår vardag. Lite om vår portfölj. Jag kan säga att de 10 största hyresgästerna står för 45% av våra hyresintäkter. Kan man tycka det är ganska stor andel, men då ska vi veta att de 3 största hyresgästerna är PostNord, ICA och DHL. Trygga, stabila intäkter som vi har på den sidan. Tittar man sen och går till vår kundflora, så är det en väldigt bra spridning tycker jag själv där vi å ena sidan sett har de gamla, kanske lite mer tråkiga hyresgästerna så att säga, men som är stabila, deras verksamhet rullar på och vi vet att flödena består. Och sen så har vi de här nya spännande som är en del av den digitala handeln och de som har gjort en bra omnikanalsomställning. Vi pratar om på tredjepartslogistiksidan om No Waste och Dream Logistics. Vi pratar om Apotea, vi pratar om Boost.com. Vi har Mat.se, vi har Mathem, vi har många av de här som är tillväxtbolagen som våra hyresgäster. Hyresmarknaden, den är väldigt regional. Jag ska försöka ta den kort, men det vi ser ändå är att vi har en stabil ökning av hyrorna. Fast det är inte som kontorssidan där man har 10-tals% i omförhandlingar och så. Och den är väldigt, hur ska jag uttrycka det, regional. Där det finns mark att få tag till, där man själv kan bygga. Där är hyrestillväxten ganska flat. Man får index uppräkning. Men i övrigt är det ganska flat. Men kommer man in i de urbana områdena där vi har allra största delen av bestånden, då kan man få några procentenheter till när det är dags för omförhandlingar. Vi har extremer. Ibland är det spännande att ta det. Som exempel har vi en kåk på Västberga som tidigare var en sån här traditionell en transportör som hade sin åkeriverksamhet. Då låg vi för 4-5 år sedan på 450-500 kronor kvadratmetern. Idag har vi Sorundahallarna inne i samma kåk som håller på med distribution där avståndet ut till till deras kunder blir så betydande, tar så stor del av deras operations. Så de är idag uppe på en hyra på 1800 kronor kvadratmetern. Det är otroligt viktigt att ligga nära sina kunder. Och detta aktualiseras mer och mer av e-handel och e-handelstrenden där vi vill ha snabbhet och en effektiv sista delen distribution. Många benämner det last mile. Vi har en genomsnittslängd på kontrakten kvar på 5 år, så det är ju rätt stabilt att veta det. Och jag brukar också säga att hyresgäster kan komma och gå, men flödena består. Alltså varuflödena som finns, de upphör inte, utan det blir en annan operatör som går in i huset. Idag har vi vet inte om jag har med mig, nej det har jag nog inte med, men vi har en uthyrningsgrad på 96%, vilket i min värld nästan är för hög för att vi får problem att flytta runt våra hyresgäster. Men det är marknaden som ger det åt oss, så att säga. Som sagt, ett tillväxtbolag. Vi är en del av svensk handel, svensk omni-kanalsomställning. Och det stora grejen som händer, 10 minuter kvar, tack för det, det är att det arbetet som man tidigare gjorde i butiken, det flyttar man, jag försöker göra det så enkelt man bara kan, det flyttar man tillbaka till lagret. Istället för att själv som konsument går in och gör arbetet så gör någon annan det åt oss, fast inne i lagret och terminalen. Varje år tillförs, de 3 senaste åren har det tillförts 600 000 kvadratmeter lag- och logistikyta i Sverige. Tittar vi för 4 år sedan och bakåt, då låg vi och taktat 200 till 300 000 kvadratmeter. Och den stora och den bärande poängen för mig här är att e-handelspenetrationen i Sverige, den ligger på 10%. Vi tycker och tror att vi är väldigt långt framme i beteendet och digitaliseringen. Men vi är en bit efter fortfarande. England ligger på 19-20%. Kommer vi till Sydkorea och de urbana områdena av Kina så är det en bit över 30%. Jag kan inte säga någonting annat än att den trenden kommer att fortsätta. Lite röster från marknaden. PostNord och deras pakethanteringsdel. Nu vet vi att det precis har varit Black Week, Black Friday, Cyber Monday och rekordvolymer som strömmar genom systemet. I år har de lyckats. De har varit mycket duktiga på att kommunicera med marknaden. Har inte alls fått de här reaktionerna som de har tidigare år. PostNord säger att inom 5 år, återigen det är samma siffror som jag rabblar upp igen, så behöver de fördubbla sin kapacitet i deras paketterminaler. De behöver mer kapacitet för att kunna få igenom alla de här paketen genom systemet. Lägger man på business to business där man också tar lite av konsumentens och vad ska man säga, ungdomarnas sätt att agera på, så driver det ännu mer paket i flödena. Elgiganten är jag väldigt stolt över själv, för där levererar ju ett omnikanals automatiserat system för 3 år sedan, 4 år sedan. Det var en jätteinvestering över 300 miljoner. Det var för att kunna gifta ihop både butik och e-handelsflödet. Jag läste precis när jag gick in i rummet att på 3 dagar under den här Black Friday-helgen omsatte de över 1 miljard. 1 miljard. Och det är rekord inom svensk handel för ett enskilt företag i kedja att komma upp i de siffrorna. Och det hade de inte klarat utan att ha gjort den här omnikanalsomställningen som betyder återigen mer lageryta. Det är inte vår kund, men det är ett par exempel. Vi har åt ett tredjepartslogistikbolag i Helsingborg byggt en automatiserad anläggning för No Waste som kör Björn Borg, Retail and Brands med Polarn och Pyret. De kör Brothers och några varumärken till. I samma anläggning flyttar vi in också Panduro och kommer att köra deras e-handelsdel. Högt automatiserat, omnikanal, flera hyresgäster i ett och samma hus, och det är helt unikt som vi alldeles precis har blivit färdiga med. När de flyttar, när Retail and Brand flyttar deras Brothers-verksamhet in i huset, då hade de 2 veckors backlog Borås som hade uppstått under själva flytten. De arbetade av det på 3 dagar när de kom in i nya moderna faciliteter med automation till hjälp. Jag håller där. Jag har trender inom e-handel, jag har varit inne på det. 10% penetration, vi vet att det kommer att växa, det kommer att bli 20 och det kommer att bli 25. Det är bara frågan om tid och snabbt det går. Tillväxttakten har legat i över 10 år nu på runt 15% på helårsbasis. Och talen blir större, så det blir större effekter i absoluta tal. Och det är det vi ser, de här 600 000 kvadratmeter byggnation som jag pratar om. Hållbarhet. Det händer jättemycket inom hållbarhetssidan. Det går jättesnabbt. Catena, vi har beslutat oss för att varenda ny byggnad vi sätter upp, det ska vara miljöbyggnad, silver, går all in för det. Vi har 1,8 miljoner kvadratmeter tak som i många fall passar sig ypperligt för att ha solcellsanläggningar på. Nu är det lite skattetekniskt och så här med det, men vi hoppas och tror att lagstiftarna tänker om och gör det möjligt för oss att bygga fullt ut på de här taken, för då kan vi faktiskt tillföra kapacitet i systemet. Vi har rekryterat en hållbarhetsansvarig och detta är otroligt mycket drivet av både att vi vill göra det, men också att våra största leverantörer, det är ju faktiskt banker och finansiärer, de ställer de här kraven. Jag ser på obligationsmarknaden så är 41% av alla utsedda obligationer gröna. Då gäller det att vara med i racet. Jag pratar mycket om vår projektportfölj. Vi har ett värde på projekt som fortgår här och nu på ungefär 1,5 miljard kronor. Och vi har 900 miljoner kronor kvar att arbeta upp. Detta ska man då addera på intjänande förmåga framåt. Och det innebär att vi kommer att tillföra 130 000 av de här 600 000 kvadratmeter som jag pratar under kommande året. 5 minuter, jag ligger riktigt bra på det. Här är lite exempel. Jag pratar ofta om platser och positionsbyggande och hur viktigt det är att ha kompletterande funktion. Den här platsen börjar vi med en detaljplaneprocess för 12-13 år sedan. Då förvärvar vi marken och ville göra någonting. Vi är Sunnanå som är yttre ringvägen Malmö. Där väg 11 från Staffanstorp möter E4, E20 över till Köpenhamn. Har vi den här positionen. Så det är fantastiskt bra läge för den regionala distributionen i södra Sverige. Det första som vi byggde färdigt, det var den här terminalen. DHL, den var klar 2016, vi byggde den 15-16. Sen på kort tid så har vi byggt åt Chefs Culinar som håller på att leverera till restaurang storhushåll. Värsta konkurrenten som precis etablerat sig på, nej det är tvärtom, tysk. Och Svensk Cater har varit på marknaden ganska länge. Också på samma område för att det återigen får ner distributionskostnaden så gäller det att ligga rätt. Här har vi något som vi kallar för multihyresgästlager. Varje sån här låda är på 18 000 kvadratmeter. Vi kan dela in den i princip 6, 12, 18 000 kvadratmeter som 2 eller 3 hyresgäster kan flytta in i. Och det gör det att vi får en extrem flexibilitet i våra lokaler. Vi har rätt typ av koll, den klarar automation om vi skulle lasta på det. Den har rätt fria höjd i taket för att möjliggöra en modern logistik. Det fantastiska med att bygga och göra allting från början själv, börja med att förvärva jordbruksmark och sen kunna ta det hela vägen, det är att vi får väldigt, väldigt bra avkastning på totalerna. Och detta är vad vi ska fortsätta att göra framåt. Vi håller på i Ängelholm och bygga någonting som vi kallar E-city. Där jobbar vi bara med e-handelslogistik. Boost har sin 43 000 kvadratmeter stora låda. Vi har en tredjepartslogistiker som heter Dream Logistics där de har en 25-30 olika varuägare som de opererar åt i ett och samma hus. Vi håller just på i detta och bygga till åt Boost som vi kommer att connecta med en brygga så att godset kan flöda mellan båda fastigheterna. Och vi har förvärvat egentligen all mark som är på denna sidan för att kunna utveckla 300 000 kvadratmeter till. Det är en del av Greater Copenhagen och jag tror stenhårt på det av samma anledning som jag börjar. Tredje positionen som jag visar här, då är vi i Helsingborg. Om ni ser, där är en korsning en liten bit längre upp uppe till vänster. Här har vi E6an, går norrut, E4 viker av mot Stockholm. Så det är Göteborg-Oslo, det är Stockholm. Och sen kör man söderut här, då landar man efter ett tag i Köpenhamn. Också ett utmärkt läge. Här har vi byggt 30 000 kvadratmeter åt No Waste som en tredjepartslogistiker som bland annat kör Furniture Box och Trademarks och så. Det är möbellogistik, e-handel. Jag pratade om det här omnikanalslaget tidigare och nu håller vi på att bygga till 20 000 kvadratmeter till på denna. Och det som är det riktigt fina, det är att här har vi kommit en bra bit på vägen att bygga en terminal åt Postnord som är 18 300 kvadratmeter. Då gifter liksom verksamheten ihop sig. Grejer som är i detta huset, det ska dit för vidare distribution. Grejer som kommer från huset här borta, det ska dit för vidare distribution. Postnord har själv 2 jättekåkar som ligger precis söder om här, motsvarande där jag står. För samma anledning. Nu kan det inte vara många minuter kvar. Det som är viktigt då, det är vår framtid. Vad har vi i framtiden? Som jag sa så har vi numera 3,8 miljoner kvadratmeter mark som vi står rådiga över. På de 3,8 miljoner så kommer vi att kunna bygga ungefär 1,4 miljoner kvadratmeter byggnad. Och de 8 miljarderna blir då 10-11-12 miljarder i potentiell. Detta är något som jag ser i en 8 till 15 års tid framåt att vi har. Men vi har att jobba med och det är det viktigaste för mig. Jag håller där. Vad blev klockan? Nej, visst var det snyggt. Ja.
Yes, tack så mycket för en intressant presentation. Förhoppningsvis så ska vi fortsätta med lite intressanta frågor. Jag tänkte vi kan börja frågorna med att titta på den karta som du började visa, där du visade era logistikpositioner. Och vad skulle du säga är den mest intressanta logistikpositionen att ha i Sverige idag? Och vad tror du om 10 år? Kommer det vara samma position?
Alltså, vill du ha ett politikersvar eller vill vi ha... Nej, jag tänker så här, det finns inte en form av logistik. Jag brukar jobba med extremer. Pratar vi... är det någon som har handlat på Wish, Kina, de här lågprispaketen som snurrar in? Nej, men det är väldigt vanligt. Det är ganska många som har det som ett nöje och sen så dyker paketen upp en vecka, 2 eller 3 eller en månad efteråt och så blir det som en liksom happening. Jag har inte en aning om vad jag köpt. Men de paketen, de packas i Kina, de flyger med ett flygbarn, landar typiskt Arlanda eller Kastrup. Man nyttjar någonting man kallar för belly freight, alltså paketet ligger där man har ledig kapacitet i passagerartrafiken. Och då får man ändå en ganska billig frakt på en väldigt billig vara. Men det är bara ett paket som snurrar genom systemet. Och där är den perfekta platsen. Flygplats, terminal och de terminaler som paketet passerar i från Kina och så för att komma till konsumenten hemma. Så där kan Katrineholm vara en utmärkt position eller Malmö eller vad för något som helst. Det är där terminalen behöver finnas. Tar vi dagligvaruhandel, e-handel, dagligvaror, det är det som växer absolut snabbast för tillfället. Vi har bara en penetration på 2%, men det har en 25-26% i tillväxt här och nu. Vi ser ICA, Coop, Axel Jonsson, de kör stenhårt på det spåret. Där är den perfekta logistikpositionen. Då det tvistar man om. Det ena kan vara ett ganska stort lager norr om Stockholm. Sunnanå som jag beskrev här i Helsingborg. Eller Malmö där ICA kommer att bygga sig strax intill detta. Eller någonstans söder och väster om Göteborg. Och då är det den regionala distributionen. Men nu finns det då andra, när man gör en nätverksanalys av detta, startar vad jag pratar om där, spännande, då finns det också möjlighet att använda existerande strukturer. Det man pratar väldigt mycket om nu, det är micro-fulfillment centers, alltså små enheter, högt automatiserade, jättemoderna, som är mycket, mycket närmare konsumenten. Och då kan det perfekta logistikläget vara typ ett köpcentrum, eller stora Coop eller Maxi eller någon enhet liknande det. Men om jag nu ska svara generellt, fler enheter, mindre enheter, närmare konsumenten. Den trenden är väldigt tydlig. Var det svar?
Absolut. Sen nämner du e-handel flera gånger under prestationen.
Ja.
Och det är ju såklart en viktig efterfrågefaktor för logistik.
Ja.
Just nu så ett problem med e-handel är att den förväntade leveranstiden från konsumenterna kontra hur den faktiska leveranstiden är av e-handel matchar inte riktigt med varandra. Det vill säga att konsumenterna förväntar sig snabbare leverans medan e-handeln inte levererar lika snabbt. Och på vilket sätt kan logistik lösa detta? Är det mer komplex logistik eller är det att man har logistikfaciliteter närmare städerna?
Ja, men det är både och. Alltså det ena är att, och sen är det också olika behov. Återigen, det finns inte en lösning. Handlar jag dagligvaror på nätet, då måste du ligga nära. Du har en kylkedja som du inte ska bryta eller det kostar väldigt mycket för att hålla varan kall under resans gång. Då måste du vara nära och då kan du leverera snabbt. Köper du möbler, då är det inte riktigt lika viktigt att du får det samma dag. Man brukar inte, utan då är det precisionen, tid och plats som är viktigt. Så att man kan möta förväntan. Men den generella är att det går snabbare och snabbare hela tiden. Tittar vi på både Bring i deras rapporter och DHL i deras rapporter och så kan man egentligen säga ju yngre du är desto högre förväntan har du på att få din dopamin fullpumpade hjärna att agera och reagera på. Så det snabbare.
Historiskt sett så har ni varit väldigt duktiga på att förbättra driftnettot. Marginalen har förbättrats varje år de senaste åren. Och vad är det egentligen som har drivit det här och hur länge kan ni fortsätta förbättra marginalen som ni har gjort?
Det ena är ju skalfördelar, att vi klarar att hantera större volymer på samma bemanning. Köper vi, förvärvar vi det eller bygger ny fastighet, då får vi inte mer folk i systemet på den centrala administrationen. Fastigheterna modernare så kräver de mindre arbete och sen kommer vi från en tid där vi haft fastigheter som har legat i eller nära städerna som har varit logistikfastigheter en gång i tiden men som har konverterats till något annat. Och där har vi 3-4 sådana kvar fortfarande i systemet som vi avyttrar när vi får rätt betalt för dem. Och de tarvar ju ganska mycket arbete. Det är en himla skillnad att ha 40 hyresgäster i en fastighet mot att kanske ha 1 eller 2 eller 3.
Jag hade gärna ställt många fler frågor men tyvärr är det bara 5 minuters frågestund. Så vi tackar Benny från Catena så mycket med en applåd.
Tack.
All right, welcome. It's time to round off day one of ABG's Introduce Investor Days. And that we do that with Garo. So we have Patrik Andersson and Helena Claesson with us today. That will tell us a bit more about Garo. So I'm just going to give the word to you.
Thank you very much.
Go ahead. Thank you.
Thank you. As Oskar said, my name is Patrik Andersson. I'm the CEO of the company, and my colleague Helena. We will guide you through a presentation about Garo, and we will start with a short movie.
Strong innovative power, great courage and a unique foresight has made Swedish Garo one of the leading developers of new smart electrical products. We're an innovative force with an internal strength and competence. Focusing on durability and design, we develop products that ensure energy saving, smarter control and simplicity in both assembly and usage. We are present throughout the construction with temporary electricity. We provide the completed building with a permanent power supply. We light up campsites and marinas. We build effective solar solutions. And we can charge all kinds of modern electrical vehicles everywhere, with a home charger or with an efficient fast charger along the highway. We take a clear overall responsibility because we are future smart.
Yes, I will tell a bit more about a short introduction. Garo is celebrating 80 years in business, and then, we were founded in 1939. We are divided in two business areas, segment Sweden and segment other markets. And the other markets is in Finland, Norway, Ireland, and Poland. And we also announced last week in a press release that we also opened a company in the UK in the beginning of next year. So that will also be in the other markets. We have production sites in Gnosjö in Sweden. We also have production site in Värnamo, 30 kilometers from Gnosjö. And we have one production site in Szczecin in Poland. The headquarters is based in Gnosjö in Sweden. So you can see also on this chart that we have our focus area is Europe and Northern Europe. And why Europe? You can see many of our products works with the regulations in these countries. And if we go to the e-mobility, the regulation is perfect for Europe. There is some local adjustments, but overall our products is very good for your European markets. We are divided in 4 product areas. Electrical distribution products, which is our biggest area. It stands for 49% of our turnover. In this area we have about 3,000 article numbers. It's car heater, safety switches, meter cabinets, components, and I will show you some examples, some slides later here. The second biggest area is project business. Project business in Garo is customized enclosures on switchgears. So we have enclosures for apartments, villas, commercial properties, and industry. And we could also have a power supply, for example, for a big e-mobility solution. I will show that later on also. The third area, and for the second quarter in a row, our second biggest area, e-mobility. E-mobility, we have the wall boxes, the public chargers, the smart chargers, and all the things around that. It's 22%. And our fourth area, temporary power, which is products during the construction sites, electricity, lighting, heating, and drying. Some examples of the products we have in our portfolio. We have components and different enclosures for new construction sites or a renovation of apartments and villas. We have safety switches. You mainly see them at home, maybe at your heating system, washing machine, and so on. But we are selling a lot for the industrial application for machines and ventilation and so on. Car heater and also outlets for marinas and camping sites. Here we have learned a lot and a lot of knowledge for the e-mobility, because we have learned how to have a different material in different climate with snow, rain, salt water, heating, cold, and so on. And we also have had a lot of electronic and software during a long time outside, so we can see that everything is working. So we have, for example, on a camping site, when you are checking in, you get a login in your app, and then you can have to pay for the energy you consume during your visit. This is also working for the car heater or marinas. So it's a smart, energy efficient system. Products for industrial, outlet boxes, plugs and sockets. Solar energy. Here we do a package with a turnkey solution with the panels, inverters, safety equipment and mounting system to a total turnkey solution. And this also is very interesting for the people or companies who is buying e-mobility, because they want to have renewable energy. So this is a package we are selling. Meter cabinets and meter boards. This is different enclosures for the utilities energy meter. That's also a product you maybe have seen in your apartment or villa, and hopefully it's a Garo enclosure. So you have to check that when you come home. Ground mounted cabinets. Here we have launched a total new cabinet for power supply industrial. We put power supply e-mobility solution to power supply lighting at the street. And we have chosen a different material for the sustainability, a material called Magnus, which is good for the environment. So this is a totally new product that we start to sell in the market at the moment. Temporary power. This is the electricity cabinets, power supply a construction site like this. You also see all the white dots in the construction. That is the lighting. So we have the electricity, lighting, and also the heating, which is a new product for Garo also. And what's the new thing with this? Because heating and drying system is not new on the market. We have put in some electronics to the product that you can run this in an efficient way to save energy during the construction time. So you can save energy. So you have to put in some smart electronic to save energy. We always think in that way. Also, when we have the lighting, is to save energy. The e-mobility, we divide e-mobility in 3 product categories. The first one, the wall box, that you could have at home, at your work, or in the apartments, in the parking garage. Then you have the public charger, that we call LS4. And these 2 products could talk to each other. So if you have 10 of this one and 10 of this one, they could talk to each other during a cloud. So you can say to this e-mobility solution, you have this amount of energy to use. And then it split it in a smart way in how many cars it's charging at the moment and how much power they need at the moment. So it's a smart system behind the products. And the third step is the quick charger or high-speed charger. And we have decided to be in all these 3 segments because we think it's quite important to be a competitor supplier of all these products. And we have summarized some of our competitors. And in this box, you can see all the competitors in the AC side. And that's the wall box and the public charger. And the box to the right is for the DC, the quick charger. And we had, you can see some of them is in this box, some of them in this box, and some of them in both. And we have decided to be in both because we think that's important to give the customer a turnkey solution. And we can also take the big contracts. So we think it's quite important for us. Q3, what's happened in Q3? We were on the politic week in Gotland, on Gotland, Visby. We were a collaboration with Volvo Cars. They were charging the hybrid cars on our chargers. As you can see, the black one. We could also have some 80 years logo. And we also have some chargers around Visby, so everybody can charge the battery cars or hybrids. We also, during the quarter, signed an agreement with Vattenfall in Norway, Netherlands, Great Britain, and Sweden for the smart wall box. And the smart wall box is the wall box who could talk to the cloud. And Vattenfall has an own cloud called InCharge. So they will, our charger will talk to Vattenfall's back-end system, so they can charge the end user for the charging for the car in a smart system. We also signed an agreement with OKQ8 for public chargers and wall boxes, the AC chargers. And it will be for Sweden and Denmark, and maybe some more countries during the agreement. So we have started this just after the third quarter. So it will be a really interesting contract. Now over to the financial.
Yes, some financial data from the third quarter. As you can see, we had a growth of 11%, going from 212 million to 235. And all of this came from organic growth. We had a lower EBIT margin, however. We ended up on about 23%, 24 million, giving us 10.1% as an EBIT margin, which is less compared to the same quarter last year. And the majority of this came from the lower gross margin in the quarter, and that was an effect of a negative product mix, but also 1.4 million as a currency effect. That was, so to say, heavier in Q3 than in a normal quarter for us. Also, we have continued. We started in the Q2 with increased market presence, and we also invested in our sales organization, mainly within e-mobility. This is something we continued with in the Q3. E-mobility is a really growing product area for us at this point in time, and we think it's important to be present and to continue the growth at the same speed as the market itself is growing in that area. So we are investing quite a lot in that. The earnings per shares were negative in the quarter. However, for some of you with a sharp eyes, you will see that if you compare the first 9 months, 2019 with 2018, the earnings per share is actually increasing instead what it looks like in Q3. That has to do with a different way of reporting the currency effects that was in 2018 as a financial net, but in the 2019 in the operating costs. And if we look at the net sales divided in the 4 product areas, we had a growth within electrical distribution products of 16% in Sweden and 4% in other markets. And in Sweden, it's good for us because we can see from statistical data that is, so to say, public, that we know that the electrical distribution product market, so to say, grow in the third quarter with about 4%, and we grow at the same time with 16%. So this means that we are in fact taking market shares in this product area. Also, as you see, e-mobility keeps growing for us, 14% in Sweden and 51% in other markets. In total, 25% if we compare the 2 quarters, 2018 and 2019. And also good for us to see is the project business, which happens to be that the third quarter every year in that product area is for us the strongest quarter. And this year we grow with 13% in that area. And looking a little bit on net sales and EBIT development over time, we have staples for each quarter, but also the line for the rolling 12 months. And looking at net sales, this shows a little bit the seasonal variations we have, where we normally have a very strong Q4 and a weaker Q3. This is mainly due to the fact that in Sweden there is a public holiday, giving us less working days in that quarter. But again, over time, we have a very good growth in net sales. Looking at the EBIT, the growth or the EBIT margin has been with us throughout the years, despite the last Q3, where, as I mentioned before, we can see a slight decrease, which again had to do with the negative product mix, making us weaker in the gross margin for the third quarter. And if we look at net sales and EBIT development over a longer period of time, we had a very rough times, 2012 and 2013. At that point in time in Sweden, there was very few constructions, new houses being built, and the Swedish market was really in a low phase. And then here, around 2014, 15, that's where the wholesalers in Sweden started to really look into the suppliers and dividing them in categories, an A supplier, B or C supplier. And for Garo, at that point in time, thanks to good quality product and delivery on time, we were categorized as an A supplier, which helped us giving a boost in our organic growth in this period. And then somewhere here, 2016, 17, that's where the e-mobility business started to take off, also then giving us a high increase of sales. And we have some financial targets that we guide towards. We say that we should have a sales growth of above 10%, and that is to be looked upon over a business cycle. Last year we had 13. We say the same thing about profitability, where we should have a growth of 10%, and last year we came in at 12.6. Then we turn on return on equity above 20%, and we had 30.1. And you can see equity ratio, we have a healthy balance sheet. And then dividend policy, where we say that about 50% of the net result should be paid out, giving, of course, some feeling of the need of investments and strategical challenges we want to do. We have some sustainability goals. Sustainability has always been a part of Garo's operational business. Right now we have 6 out of the 17 that we really focus on. And it's number 7, 8, 11, 12, and 13 and 16. And especially in the Q3, we talked about goal 8, where we had, among others, we looked into how we work, the processes, how we work, the work environment for our employees, specifically in the production area. We also had internal audits, both regarding ISO 9000, which is within quality, and also within ISO 4001, which is environment. And we really like these internal audits because for us, it's also a way to find the potential for, so to say, operational leverage where we can increase profitability by working in a smarter way, more efficient way. So we actually like it. And also in October, we are proud to say that we were listed or rated as a number 5 out of 6 points in the DE's sustainability report that they had, where they looked upon the strategical aim within sustainability, and they also looked a lot about how you handle sustainability questions within your daily work. Going forward, a little bit about, we always, sales in relation to business cycles. We often get the question a little bit on our relation between sales and new houses being built and, so to say, business cycles. And we love new houses being built. But also, as Patrik mentioned before, there is digitalization within homes. There are smart home solutions which keeps sales up. So in the blue line here is our net sales, excluding the EV charging, the e-mobility sales. And that's the diagram to the right. And here we can see construction starts in Sweden, the green one, and the dark blue or purple is construction sites in Stockholm specifically, where we can see that, yes, there is a trend. We are on the way down, but Garo sales per quarter has gone from somewhere around 80 million per quarter and steadily going up until 180 something per quarter. It's also quite interesting to see that again, Q4 for us is always a strong quarter. And the big dip here is actually where the banks in Sweden decided that you had to do more amortizations on your house loans.
Yes. Strong growth and development opportunities. Garo has always driven about organic growth, and that will be the strategy for the future also. And also come up with new products. Product development will be the key for the Garo in the future. But we also look at acquisitions. We look at special knowledge. We are looking for new markets that is interesting for Garo. But to say again, the main driver for Garo is organic growth and product development. We have done 2 acquisitions since we were listed, 2016. And we made both of them in 2017. One company in Luleå, Webbil, with a special knowledge in electronic and software. And we made one acquisition in Medius, which were in project business, so we can expand in our project business in a smooth way. So organic growth will be the strategy for the future also. If we're looking forward, what is happening in next year? We see a strong demand for the e-mobility, all the product range from wall boxes, public chargers, and quick chargers. We see the demand also in all our countries and in all Europe. And of course, it will be driven of expansion of the charging infrastructure because it's a lot of cars is selling at the moment, so they have to build up the infrastructure in all the countries. Demand for new constructions, we can see slow down a bit, but as we mentioned before, we think it will be a stable level for renovation and also to make your property energy efficient. That will be important during next year, so we also have that type of products. The other markets remain favorable, we think. So all in all, we have a positive view on the market condition for Garo in next year. So thank you very much from our side, and
okay,
thank
you very much. Yeah, we have time for a few questions as well. So, I mean, I guess firstly, you mentioned that, let's start with e-mobility.
Yep.
So you mentioned that you have all different types of chargers, and you explained that you want to be able to provide clients this wide range of solutions. And there are quite different competitors in both segments. How are the two different markets, how do they differ? How does private home charging differ from, the more public infrastructure in terms of maybe growth and competition and so forth? Could you elaborate a bit?
We can see at the moment, we think the two biggest area will grow fast is home charging, of course, and also charging at your work. This is the two places you have to charge your car. So we think that will grow faster. And then, of course, we have to build infrastructure during the highways and so on. But home charging and charging at your work will be the most important thing at the moment. And the difference here is that the home charger, you can have a standalone product. You don't need maybe to have it in the cloud. And at the work, you have to have cloud system to see how much is you charging and I'm charging, so we can pay for the energy. We can see a lot of competitors in the home charging, and in the charger is not connected to the cloud. But we think in the future here and from now and then to the future, you should connect your home charger also, because you have a this amount of energy to your house, and if you plug in your battery car, maybe the fuse will blow away. So you have to have smart system to manage that, and that we have in our products.
Understood.
So we think it's important to have a more top-notch product, so to say.
And when you so when you sell to when you want to charge at work, for example, is that the wall box as well, or is it the public?
Could be a wall box or the public.
Okay.
It demands for where you should mount it. So you can use both.
Okay.
Yeah.
And just to go back, so now 2 quarters now, you spent a bit extra money on e-mobility, on market presence and sales. Could you just elaborate a bit more specifically what you've been doing within the group over the last?
We have done some big exhibitions in the e-mobility that we think it's important to show that Garo is a brand to count on, also in Europe. We are a big brand in the north part, Nordic countries, but we also will be a player in Europe. So we think it's important to be near the customer to show our products. We have also invested in people, so to say, salespeople, indoors and outdoors, and also in marketing, of course, because we need to talk to a lot of people, and you can't do that with hands and feet, so to say. You also have to the digitalization, social media, good web platforms, and so on. So we need to invest some things there, and that have we done for 2 quarters now, as you mentioned.
And just to elaborate on that, so this new subsidiary in the UK.
Yeah.
So previously you handled the UK business from Ireland, if I'm not mistaken, and then
that's correct.
Now you're deciding to open your own subsidiary in the UK. Could you elaborate just a bit on the reasoning there, why you decided to do this, and is this exclusively for e-mobility, or will you sell your products as well through this channel, or?
Yeah, as you said, we have been done in business with UK for several years from our Irish company, and we also have contracts, as we mentioned before, with E.ON and with Vattenfall that we are selling products to UK. But we see it's a very interesting market. They have a lot of battery cars, and they will invest a lot in infrastructure, and we had good connections in the countries. So we think it's a good step for Garo to open up a company to be there on the market, so we can increase our sales in a quicker way. And of course, we'll sell e-mobility, as you say, but we will also sell the product in electrical distribution products. So when we start up, it will be e-mobility and electrical distribution products in the beginning. Then we will see if we also sell projects and temporary power, but in step one, e-mobility and electrical distribution products.
All right. Yeah. And just a final question then on, so you showed this graph on the cyclicality and constructions and so forth. So the remaining business, which is 7-8% roughly of sales, is the more cyclical, let's say. But we saw this graph. But you also mentioned renovations. Could you just split the three different segments? So you have the products, the projects, and temporary electricity. And sort of what are the main drivers there? Are some of them more construction driven, some are more renovation? And just walk through the segments.
Yeah, you can see if we start with temporary power, because that is the easiest one. Of course, we need to have new construction sites for temporary power and so on. So that's the main driver for temporary power. So if the constructions starts go down, of course we will see that in the sales of temporary power. But of course we are using that products in different areas also. But if the construction starts go down, we will see that in the sales in temporary power. But if we go to project business and to electrical distribution products, we have a lot of products for renovation, as I said, and energy efficient. You have to solar energy, for example, they invest in that type of product. So the graph showed when the construction starts go down, the renovation will go up. So we could manage that quite well, and we have done it for many years, and hopefully we can do that in the future also.
Yeah. And okay, so one final question: the solar cells that you showed, that's a fairly new venture, I think. How much of the business is the solar business today, and do you manufacture these panels yourself, or do you buy them from someone else?
We buy them from a European manufacturer. And we have working with solar for about 4 years now, and at the moment it's quite a small sales, but we see the increasing is coming. It's a quite a mature market. It's not so mature that the EV business, but we see some. We could see the same things are happening, but the solar needs some more years. So we think it will be a quite important product in our range in the future, but we have to have some more years for a more mature market.
And for solar, are you targeting, for example, like houses, villas, or industrial customers, or are you targeting a certain segment?
Yeah, more industrial and apartments. Okay. The villas is not our main goal, because there is, if you can Google and look how many selling solar products you will see. So that's not our main goal, because we have a high-end product with long warranties and good products. So we have for industry and apartments. That's our main goal.
Yeah. Well, thank you both so much. I think unfortunately we have to stop here.
Yeah.
Thank you so much for coming, and thanks everyone else. And I hope to see some of you tomorrow as well.
Yeah. Thank you.